Great turnout. Really, thank you for everybody for joining us today. And usually when I have these events, I've been doing these for so long, it would usually rain or snow. And we have actually a beautiful day. So we're excited about that, right, Jessica? Yeah. So we have a great lineup of speakers today. This is a really, really important topic that we're going to be talking about. And I can't stress the importance of really, what we see going forward and taking this back to your offices, to your shop floors, for our third parties, taking it back to your clients. And so we just want to line up. Today we have obviously Jeff Schuster from an overview, what's going on with production volumes. We're going to roll into Charlie Clevenger, who will be leading our segment on really fostering a culture of continuous and cost improvement and what that means. Ted Mabley is here. He's going to really drive down a little bit deeper. We're probably going to go a little bit deeper than we normally do on some topics around costing and the importance of that. And finally, most excited to have with us from General Motors, Tony Miller. And this is going to be the highlight for you to hear about what we think about what's going to happen with costing and pricing and what General Motors sees as the future. So a real exciting lineup. So I'm going to take us real quickly because you're only going to have me for actually a couple slides because I'm really excited that Dan Bruce is really one of our national automotive practice leaders now, is going to lead us off and do a lot of the introduction slides. So you only have me for a couple slides this time. Well, we just presented our manufacturing outlook less than 2 weeks ago. And what we talked about is the next industrial transformation. And I asked a question, how many people think that is Industry 4.0 and connected devices, right? All those things we talked about, out on the shop floor. And we did that 7 years ago. I had to look that up, actually. And so the next industrial transformation really is disruption. And you say, yeah, Tom, we're always dealing with disruption. Yes, we are. We usually are. But at this scale, is it a geopolitical? What's going to go on? I mean, is there going to be another war? I don't know. How does that impact? Is that going to shut things down? Who knows, right? Huge impact. We're dealing with climate change, ESG. Which way the election goes? Are we all in or are we all out? Labor force, which I don't think is going to change depending on the outcome of the election. We have a very tight labor force. The skilled labor that we are looking for many of our shops that have great opportunity, but we lack today, and how we're going to bridge that gap. And who's going to win that race? Is it those that are larger is it a race to scale, right? And what about another black swan event that we don't even know about? COVID-2, who knows, right? Globalization is not going to stop. We hear about nearshoring and reshoring, right? And we think there's a lot of opportunities, and there are. But there's a lot of risk. When people start putting pen to paper around what things cost, they're like, if I'm competing on cost, I need to go where the lowest cost is. Is that Mexico? That seems to be the darling. If I'm competing on value, yes. Medical devices, other, what we deem as, from a national security standpoint, yeah, we're going to see some of that. We're going to continue to build out our supply chain. Lots of risk going on with that, as we can tell. Technology takeover. This is something we spent more time at our manufacturing outlook on, really around AI. We hear a lot about it. I'm not deeply concerned about it, but I will say in automation, I was out at a client that uses visual AI to detect part defects. He takes out 2 or 3 people on that assembly line. How they program these automation lines will change very aggressively. How quickly that will advance will impact manufacturing. And the political chaos. I don't know, is there political chaos? I'm not sure. I'm not sure there is or not, but there's a little bit of an election coming up that it's going to have a big impact, and it probably already is impacting some of your businesses today of uncertainty, right? Will we get clarity from this election? Will we continue down the path that we've been going down on EV? Will it be mandated? Will it be more mandates? Or will we put the brakes on it, right? Or does it even really matter? But this just sets the stage that we are really focused on clients right now to be very smart in thinking about every cost that they have. And because, as you know, if you go to a dealer lot, and I was just talking with a client, the cost of a vehicle, even today, is really, really high for many people. So how are we going to combat that? And there's going to be an intense price pressure. But that's just, I want to just set the stage of why we think there's this focus around, there is this massive amount of disruption, and disruption will equal opportunities, and for some of our small and medium-sized companies, it'll be very difficult to manage through if you don't have a plan. And that's what we're going to go through today, is how to really compete and address, first the reaction we want to do is get a price increase, right? But have we really looked at ourselves? Are we as efficient and as productive as we can be before we go for that price increase? And so I'm very proud of the team that we've assembled today to present to you. And Dan's going to join me on stage here and really kick off where we left off and several years ago on electrification of what we think the future is for EVs and beyond, and set the stage for the rest of our conference here. Thank you.
Good. Thanks, Tom. All right. Good afternoon, everybody. Okay, so this slide, hopefully this looks familiar to some of you in the room. This actually was a slide that Tom put up in our 2022 Automotive Outlook. And why was this up there, this don't panic? At the time in 2022, we're hearing messaging of, hey, in 5 to 10 years, 50% of production is going to be pure battery electric vehicles. If you're a supplier and you're not supplying electric vehicles, you're going to be out of business. And what we were saying was, don't not listen to that, right? Electric vehicles are coming. They're going to be here. But don't panic. The rollout, the adoption of those, we think it's going to be a bit slower than what some of the messaging is being said. Last year, 2023, we introduced a very similar concept, and we called it our dual strategy. The idea on the dual strategy was focus on what you do well, whether that's ICE components, BEV components, whatever it is, focus on that, get your operations improved, improve your profitability, improve your cash flow, use that to then fund some maybe new growth areas of the business, and have that be your strategy while all the electric vehicle is figured out. So it still applies today, the don't panic button, and we have been saying this now for a couple years. So we take a look, that was 2023, where are we at with electric vehicles here in 2024? We'd say kind of at a rain delay. It's paused. It's not at where it was at previously. And you could tell where my head was at because I was building this slide a week or two ago and all into the Tigers. So bummer that the season's over, but that was a lot of fun. So we're at this rain delay now. And you're seeing that. You're seeing now in the news some pushback. The OEM production targets aren't quite the same. Where their electric vehicles are coming out, that's being pushed back further. And so I see all this, and we're talking about an electric future, and I, as part of our strategy practice leader, I'm very data-driven. So I said, all right, I'm seeing all these news, you're hearing these things, but I want to take a look at some data and see what does that actually mean. And so we did dig into some data set that we wanted to present everyone with and say, what does that look like? So the top row here, that's a 2022 North American forecast. The middle row is more recent, that's 2024. And then the bottom row there is 2024 versus 2022. So what's the difference? And the numbers that you're seeing in there are all percentage of total production. So if I look at 2024 in that top row and I see ICE 72.6, that's 72.6 of production volume is ICE, and 27.4 is electric. And then below that, with the hybrid and the BEV, is the breakdown of that electric. So how much of it is a hybrid vehicle and how much of it is a pure battery electric. So as I look at this, I wanted to point out a few observations that I think are interesting. So we start with the 1A category. That's, I'll call the next 3 years here. And let's just look at ICE and electric. And you see there is some pullback. So it's about a 1.5% of the production volume change back to ICE in 24, same in 25, about half of that in 2026. So not a lot, but when you say that's relative to it was 27.4%, 1.5%, you know, it is a significant pullback there. But what's happening, we look at what happened inside that electric. So most of that pullback is on the BEV side. So you see 2024, 2025, and 2026, it's less in 2025 and 26, over 2%. But actually in 2025 and 26, the hybrids, you know, are moving up. So we're seeing this shift, even in the very near term, of going from BEV to hybrid. So then let's look the 3 years after that, so 2027 through 2029. So this is interesting. IC versus electric, actually the electric starts to increase. So we're seeing all of these reports about it being pulled back, and that is true in the near term, but then we're seeing that that's actually growing, and it's a bigger from a couple years ago in the future there. And what's happening with that, though, when we look at the hybrid versus BEV numbers? So most of that, our BEV in 2027 is still less than it was a couple years ago, and it starts to go up a little bit, but our hybrid numbers are much, much larger. So we've got Jeff Schuster here from GlobalData. He'll be able to kind of talk through some of this and explain it further, but what we're seeing there is kind of along the lines of what we're hearing. A short-term pushback in the BEV electric and electric in general, but really a shift to hybrid. We're seeing everybody move to hybrids. So what does that mean? Another theme that we've been talking about over the years is with now BEVs, hybrids, and ICE vehicles, there's this higher mix, lower volume that you need to be prepared for. So it's shifting over time, but we're still having these three sets of vehicles, BEVs, hybrids, and ICE. And this is a good example of that. So you look at this chart, this is 2026 model launches. You see BEV has 45, hybrid 14, ICE 15. But then you look at the percent of the production volume mix. So you've got, of the hybrids and the BEV, 80% of your vehicle launches, but those are only accounting for about just under 40% of your volume. So that is a very high mix, low volume effort there. The average, you know, production EV nameplate there at about 26,000. So that's something to keep in mind as a supplier and in the automotive industry, this higher mix, lower volume, and can we get skills and be able to serve that market? And why is that happening? Well, you've got all these vehicle nameplates that are multi-platform launches. So you've got a vehicle now, and maybe it has a BEV, it has a hybrid, and it has an ICE. So you have three different vehicles really for one vehicle, or maybe there's a hybrid and an ICE component. So that's driving a lot of this high mix, low volume. You also have some new entrants coming into play. So that's another one, and the new entrants aren't getting to the volume levels that our traditional OEMs would be, especially initially on. So there's that, that high mix, low volume coming into play. What else are we seeing on the electric front? So still your BEV price is much higher than your ICE vehicle. So consumers, when we're seeing not really buying into the adoption, That's one of the reasons there. And OEMs are still losing money on their BEV vehicles that are sold, but that gap is closing. So we are seeing the gap start to close there, but they still are losing money on their BEVs that they're selling. So what's going on? That's a little bit from the electric side and the don't panic side, but some things have changed over the past few years. So as we came out of immediately post-COVID, there were some things going on. There was a lot of money out there, a lot of disposable income. Interest rates were lower. We had some supply chain issues, the chip shortages, so that was causing some low inventory. Vehicle prices were high, a lot of investment in EVs. So a few years ago out of that, there was a lot of high profits from the OEMs. And what started to happen now as we look at what's gone on more recently? So we had inflation, less disposable income, higher interest rates. The inventory is increasing. There's more inventory. You can see on this chart, the inventory and days supply is going up. Lower consumer adoption of the EVs than we originally thought. The higher vehicle mix and increased competition from the low-cost countries. So all of this is coming into play and really creating some new themes that the OEMs have to take into account. And speaking of low-cost countries, China is coming. If we look at what's been happening in 2024 as far as what China's been doing, from a scale perspective, these are some stats I was reading this morning. They have almost twice the amount of production that North America has. Capacity, they have enough capacity they could serve half of the world. They're more efficient, so their vehicle costs are about 25 to 30% less than the rest of the world. They have about 75% of the batteries for battery electric vehicles. And so all of these things come into play. They have a large portion of the Chinese market share, but they're looking to come and take other regions' market shares as well. So you saw on the prior chart all of these things that are going on in combination with China coming. And we're at a point now where OEMs and the big tier ones, they're really focusing on cost and cost reduction because they have to because of all those things that are coming. And we've got Tony Miller here today from General Motors who's going to talk a little bit with Tom up here about what are they doing related to that? Why are they doing it? And what as a supplier can you do to be successful as they're looking into that cost reduction? So what are some things with the cost reduction that they're doing? So your customers, the OEMs, the tier ones, they're investing more in cost engineering teams. So they're building up teams that are digging into the cost so that they can investigate them and go back to their suppliers. They're investing in technology and analytical tools. So they're buying programs like some that you see up there. And what this allows them to do is rebuild some of the components that you're building with some assumptions so they can go back in discussions and negotiations and say, here's what we think the cost is. Here's what you said the cost is. Let's explain what those differences are. So really getting narrowed in on those costs. And that's something you have to be prepared for because they need to reduce the cost of their purchased components. And in doing all this, this is also expected to decrease development times. And that's going to place pressure on supplier processes and systems. So these are things to keep in mind. But you're going to be all right? You've been through this. Focus on cost. This is not the first time that you've heard this. It's part of the cycle of automotive. That's where we're at now. But what we're going to do, you've been through this before, is help you get through it even better this time. And that's the whole theme of today's conference is a continuous cost improvement plan. So what can we be doing to get in front of these costs, understand our costs, lower our cost, so that we're competitive and we remain competitive, especially globally. And so this is what we're going to lay out today. This is just a high-level highlight of a best-in-class continuous improvement plan. And really, we've got the two speakers that are going to speak. We have Charlie Clevenger here. Charlie leads our operational excellence practice. He's done a lot of projects with suppliers where he's gone in and laid this process out. So he's going to walk you through how he does that and seeing a lot of improvements to improve profitability, cash flow, and then win more business with customers. So if we look at what this path is, it really starts, and there's a reason there's one at the top. What's at the top is at the top, and that's setting the tone at the top. So in order for this to work, ownership, senior leadership, They need to be involved, they need to buy in, and they need to make sure that their teams understand this is something we're doing. This is one of the #1 areas that we've seen this fail, and I'm sure Charlie is going to talk about that further. The second is then establishing goals, measuring performance, and holding people accountable. So if you don't have goals that you're going after, you're not measuring those goals, how can you hold people accountable? One of the things we often walk into and see as we're putting this out is a lot of the financials of the company aren't shared maybe throughout. Well, if I don't know, if I'm running a particular department and I don't know what the financials are for that department, how am I supposed to measure and track how I'm doing? I'm not going to know. So these are the types of things that need to be made visible to people. You need to have goals, and you need to measure the performance against it. Increase the understanding of your costs and improving the accuracy of your quoting and estimating tool. So we also have Ted Mabley here. Ted is known throughout the industry for working on cost engineering, quoting, purchasing. So he's going to talk about that and some things that he's seeing there. But this is critically important. If you don't understand your costs, and I was just telling you how the OEMs are investing in cost engineering and systems and tools, how are you going to be able to talk to them and negotiate them and work with them if you don't understand your cost structure and able to talk to them that way? Then finally, developing strategies for procurement and sales and operations planning. So this kind of ties it all together. Putting these strategies together with the goals and the understanding of your costs are how you're going to put this continuous cost improvement plan together and really get those profitability improvements, working capital enhancements, and win more business. So as you can see, doing all these things are going to lead to those and really help you out. So these are things with all the disruption, what's the EV path, what isn't the EV path. Doing these things now, regardless of what's happening there, are going to get you in a good place and help you win business and sustain going forward. So just a little bit more on UHY and our manufacturing practice. So automotive is a part of that, but we're also in aerospace and others. And just to talk on, the UHY 360. So how can we help you and clients? And we're going to hit on a lot of these with people that are talking today. So whether in your grow phase, looking at ways that you can grow your business, that's areas myself and the strategy team can help. If you're in transformation phase, so that's a lot of what we're talking here, a continuous cost improvement plan, maybe a light turnaround, need to improve profitability. That's the operational excellence team in areas there. Or even transition, looking to sell, areas that we can help there as well. So we have ways that we can help you regardless of what phase you're in. We'll go ahead, I want to thank everybody again for being here. We'll go ahead and get the conference started, and I'm going to hand it back to Tom to introduce the first speaker. So thank you.
Thank you, Dan. We got a lot of serious topics to cover. Jeez. I want to thank everybody for joining us again. But most importantly, I'd like to welcome Jeff Schuster. Jeff's been with us from the very beginning. I think our, how many years now? 7 or 8 years. I think this is our 8th annual. Is this our 8th one? I can't remember. Our 8th Automotive Outlook. I know we're on like our 16th Manufacturing Outlook. But Jeff's been with us at the beginning. I think we started in a little room at our firm with maybe 30 people. So Jeff's been a very instrumental part of helping grow this event, and we're very excited. Really needs very little introduction. Jeff speaks all over. You've probably seen him on, I've seen him on CNBC and some of the news stations. He has over 25 years of experience with GlobalData and tremendous wealth of information. He's going to really give us, the plan, the strategy, and the outlook of what we see going forward. So welcome, Jeff.
Thanks very much, Tom. Great, thank you very much. Hopefully I can give you the strategy and the plan. We'll talk about options because I think that's the world we're in right now for sure. All right, so what I'm going to do is take you through a couple of different phases of automotive, really take it from a global perspective, but look at some of the nuances in the regions as well. And then we'll start looking at the current environment, touch on the transition to the longer term outlook, and what that means, our view on electrification as well. We saw a little bit of the changes from a production standpoint, but we'll look at some of the drivers of why we have made some shifts in our view on the electrification outlook. Tom and I did not coordinate this, but there's a similar slide here, so we aren't going to go through all the nuances, but I think it does capture really what keeps me working in forecasting, and that is there's constant change. There are constant variables that the industry's having to deal with and to assess and then react to. And I think that's really what it comes down to. We put a forecast out there, but it's not only the forecast, but it's then mapping and reacting to those changes that drive changes to the forecast, drive changes to the industry. And I think that's really the important aspect of planning, either tactical or strategic. I always like to start with a high-level view. GDP is obviously something that is important to the auto industry in driving the overlying trend from a consumer standpoint and from a buying standpoint. And this is looking at GDP growth. We've got the global view of it, US, Eurozone, and China. The good news, I suppose, if you want to look at it that way, is most of the markets have been revised upward as the years progressed. The US has continued to outperform expectations, not only in this year. We're looking at very strong third quarter GDP growth. We're looking at that transitioning potentially to continued strength in the fourth quarter. As Tom said, there is a bit of a disruption of an election, and we'll talk a little bit about that as well. That potentially has some impact in this uncertain phase. But I think once we're through that, regardless of who ends up in office, we're going to get back on track to managing really where the economy is. And the Fed has done a decent job with that. Obviously cut a 0.5 point or 0.5%, looking for at least 25 basis at the next meeting and probably progression of that going forward. The European Central Bank cut this morning another 0.25 point as well. So it's the phase that we're in certainly now from an interest rate standpoint, and that is helping to bring inflation levels down. So we are seeing that come down globally, looking at about 4, a little under 4.5 this year, a little over 3 next year from an inflation standpoint. So moving in the right direction. Consumer confidence is also, that's a down arrow, but it actually is a positive. So it is moving in the right direction as well. And this, there's been some movement in the US and in Europe. There was a bit of a pause over the summer. But just looking at the European Union consumer confidence, there was a movement positive in the latest numbers. So again, consumers have been resilient, and I think that certainly has helped the auto industry so far this year. All right, so let's get into the auto numbers. So this is looking at the selling rates, global selling rates on a monthly basis, all the way back to the late 90s. You can see a couple of down sessions there, the financial crisis, the COVID mishap that went from the COVID initial impact to the supply disruption to pricing pressures, and now we're stabilizing volume really in the high 80s. We've been at 89 million units, roughly 89.4 if you want to get more precise, for the last 4 months. The year-to-date number has averaged about 87.5 million units. So we had a pullback in the beginning of the year, and we've since come back up, and it's really been fairly stable the last 4 months, and we would expect that to continue, if not slightly accelerate as the year progresses. So looking at the near-term mix really by region, and I've categorized this as on a year-to-date basis. So this is year-to-date through September, and then looking at what the year looks like as a whole. So you can see we are expecting the fourth quarter to show an uptick in most of the markets with the exception of Western Europe. Western Europe, we see continued risk, really a flat year overall, so that would put some pressure on the fourth quarter in Western Europe. The global number moving from essentially flat through the first 9 months of the year to a 1.5% increase, that really is hinging on what happens in China. So there is still a significant expectation for a fourth quarter pickup in China, primarily driven by government stimulus. The announced plans to restart the economy, getting pricing under control in China as well, that's driving really what we see in the global number there. The U.S. also expecting a somewhat of an uptick. That is actually, we just did a revision this morning. That is a 1.5% increase, not 2%. So there is a little bit of pressure, and I'll talk a little bit about the drivers of that. And then Japan, Korea, made-up market there. We just put those two markets together, really down both about 8% through the first 9 months of the year, and then for the whole year. If we look at the BEV environment, so this is pure battery electric. This is taking out only the pure battery electric, so your hybrids are not in these numbers. Slightly different story. So we've had some softening in this market. It's still growing much more pronounced than the overall market is. As you can see, globally, we're expecting it to be up about 12% for the year. It's been 10% on a year-to-date basis through September. That's an estimate. We don't have the full splits through September at this point, but it's pretty close to an actual at this stage. U.S. is relatively flat. We do see a bit of an uptick, but it's hovering in the 5 to 6% range. From a growth standpoint, you see Europe, and this is Europe as a whole, not just Western Europe, is coming in essentially flat, consistent really with what's happening on the full total vehicle market. Again, the driver being China here. Strong growth there, acceleration of that with that stimulus that I talked about, which is both on the EV side or the new energy vehicle, which includes plug-ins for China, but also on the light commercial vehicle side as well. There are some incentives there driving that. We do see some reversal of the BEV market in our made-up region of Japan and Korea. Obviously, a very strong market for the hybrid vehicles with domination of the Japanese brands focusing there. But this is picking up some additional volume growth of the Korean battery electric market. If we pull that back together and look at these markets, looking at Europe personal vehicles, the U.S. total light vehicles, and personal vehicles for China, you can see obviously we've come off of those strong growth rates last year that we saw where Europe was up 33%, the U.S. almost 60%, and China over 20%. Now China's up still significantly, but coming down. Europe, as I said, is flat on the BEV market, and the U.S. is sitting at about a 6% growth rate total. When you look at the different technologies, and this is where it gets a little interesting, focus on China for a minute, because their strategy and their benefits, their initiative under the new energy vehicles includes plug-ins, there's been a massive rise in plug-in hybrids as well in China. You see the red line representing that spike really over the last 2 years, primarily in 2024, in addition to the significant growth that we've seen in the BEV market as well. The U.S. is seeing a surge, as we heard earlier from Dan, a surge in the hybrid electric vehicle, full hybrid electric vehicle, which is the green line. You see that growing substantially. Europe, not as much of an increase, but still showing a further progression into the basket of technologies instead of just the focus on the full battery electric vehicle market. So there has been a pivot from just a launch standpoint, from a marketing standpoint, to a more basket approach, which is consistent with consumers using and driving their vehicles differently. Focus a little bit on the U.S. So looking at U.S. demand, as I said, we did revise our forecast down slightly this year and next year this morning based on some new expectations both in the retail market and in the fleet market. So fleet has been underperforming expectations. We expected fleet volume coming out of the pandemic, which there essentially wasn't any fleet vehicles. If anyone tried to rent a vehicle, they knew that or found that out. That has been replenished, but we have not gone back to those high numbers of 20 to 22% fleet that we had really prior to the pandemic. So we're hovering in the 16 to 17% range in the recent months trend. And the expectation is for us not to get a significant bump in fleet volume as fleet, which in the past was really something that was used to offset high production levels and essentially dumped into the rental car markets or pushed on commercial and government buyers. Now that has been more of a phase of negotiation than it was previously, and OEMs deciding to walk away from some deals where they might have not done that in the past. So as inventory continues to creep up, we'll see if that story holds. But we've taken the edge off a little bit for this year, so we're now at 15.8. You can see we started the year at 16.1. The spring really was suggesting we were looking at a much stronger year than is what's playing out now. So we started to nudge it up a little bit to rounding up to 16.2, but now, as I said, we're back down to 15.8 with a little bit of a risk window for the fourth quarter in the 100,000 unit range to 15.7. So generally relatively on target. Next year we've pulled about 120,000 units out as well. Again, primarily pulling down that fleet share of total. So some of the dynamics going on affecting overall purchases or what consumers are doing, it's transaction prices. So transaction, in this, we're using the US here as an example, but really it's an issue that's across all markets. So consumers are dealing with high transaction prices. I think we all know that. We've been talking about that for a while. Expectation is for those to come down. As you can see, they have nudged down, but it's more of a flattening out than it is a falling of transaction prices. Now, offsetting that to some extent is a rise in incentives. So incentives are on the increase. They're not at a point, though, where they were at levels that were pre-pandemic. You can see where incentives were significantly higher. We're not anywhere near back to where they were peaking. So it's not a massive risk now, but it's been managed very tightly. So in other words, vehicle manufacturers appear to be accepting lower sales volumes and holding pricing. So the margin is still there to an extent, even as incentives are rising. So that dynamic is really what's holding us in the pattern that we're in from a sales standpoint here in the US, which, as you can see, we're averaging almost 45,000 still across all vehicle types. When we look at that, Europe is roughly, Western Europe, I should say, is roughly 41, 42,000 if you put it in US dollars, and China's average transaction price in US dollars is roughly 25,000. So you can see that dynamic is really, again, what's driving the levels of sales that we're at right now. And when we see interest rates come down, that's going to help manage that monthly payment. So that's one area that I think is going to provide some relief as we move into next year. But it's just a matter of how much relief and how quickly that happens. So a little bit, and there's a lot going on in this slide, so I'm just going to summarize it for you. But basically, when we look at some of the impacts really from the election, it focuses on three areas. It's really trade, EVs, and the regulatory environment, which some of that spills into the EV arena and some of it goes beyond. And I think when you focus on that, a couple things come to mind. One, if we look at trade and we look at a Trump presidency, we're likely looking at higher tariffs than under a Harris presidency, though I think they both will use some level of protectionism, and there's been a maintenance of that protectionism in place and some acceleration of that with the 100% tariff on EVs from China as an example. I think all of that is likely to play a role. Now, the question is how much tariff under a Trump administration before you trigger more, essentially, backlash from that trading partner. So, and who does it involve? Is it the EU? Is it just China? Does it affect the USMCA agreement, which could get renegotiated if things go too far, or at least discussions about that? So there's a lot, I think, open in terms of trade in general there. From an EV standpoint, I think Obviously, there's a big difference between the two administrations. If they're able to get through what they would like, under a Trump administration, we're likely to see a refocus on internal combustion engines, on oil, and a de-emphasis on electrification. That will impact, at least for our market, will impact launch activity across the spectrum of EVs, but primarily in the battery electric vehicle arena. Under a Harris administration, I think we'll see a further continuation and a push of investment in infrastructure as well as in incentives for EVs instead of the reverse of potentially pulling incentives out of the EV market. So a pretty significant change in the dynamic there. Similarly, under the regulatory environment, we would expect to see some further walk back of the recent emission regulations that have been put in place, and those have been relaxed. We would expect to see that further relax under a Trump administration. And that would cause over the long run, even if the end game isn't changed significantly or is reversed in a later administration, that would cause a significant change in our forecast. If we look at battery electric vehicles and plug-ins, it's about a 25% decrease in our expectation out in 2030. So again, a lot of variability is really the impact from where this election ends up. In the near term, I think for most consumers, it's probably less variable than for the auto industry. Shifting gears a little bit, let's move over to production, and this is looking at global production volume. We put a moving average in there as well. You can see how that's ebb and flowed a little bit, but overall through August, production is down almost 1% globally. So this is coming off of the inventory builds that we saw in 2023, the growth of 10% in 2023, getting those inventory numbers back up. We're now dealing with a pullback in production, and this is where the managing of production volumes to where demand is coming more into play, and this is why I'm suggesting that the global vehicle manufacturers are willing to accept lower volume at the prices that we're at instead of over-incentivizing to get consumers into showrooms. I think this is a reflection of that. So production is being managed closer to demand than it was pre-pandemic, and that's continuing to take place. Looking at inventory levels, we pulled the three major markets in here. You saw the US earlier, so it's a similar story, a rise in overall inventory levels, a leveling off of days supply in the mid-50s. I think that's been pretty consistent, as you can see, for the last several months. If we contrast that with China, we saw a building of inventory last year of about 750,000 units, but year to date so far, and more recently in the last 3 months, we've pulled quite a bit of that inventory out. So almost 500,000 units of that growth has come back out from an inventory standpoint. So that market, again, is managing demand levels. And then Europe, we saw similar trends, slightly different numbers, but similar trends to what we saw in the US. Interestingly enough, if you look at all three markets relative to 2019, inventory is all down about 30% from where it was pre-pandemic level. So again, they're all managing in a very similar space. From a country level, this is looking at the forecast for this year relative to last year. It really is a mixed bag, and it depends on where these countries started and again, how things are being managed and where demand is. China is by far the largest growth market in terms of production levels for 2024, up about 1 million units. You can see at the bottom of that is the pullback really in Japan. So taking inventory out of the market, some of that is going to be related to less export volume for Japan. And also, if you look at the Korean market, you have a similar story there. A lot of the emerging markets, so the rebuilding of some volume in Russia in production standpoint, but also imports coming in from China. So some of that Chinese production volume is supporting that growth into the Russian market and the recovery of that market from the lows of, obviously, the start of the Ukraine war. You've got growth in some sourcing shifting going on in some of the markets, Mexico, some recovery in Brazil as well, and some additional sourcing changes in Poland. So if we pull that all back together and look at the market really from a range standpoint, and this is, I think, a realistic view of where things could go depending on the drivers. So there's a lot of different drivers and factors that are influencing where production levels go. In the short run, we're looking at downside bias. So we have two downside ranges here, and they're not necessarily scenarios, but they're ranges that could take into account several of the factors that I'm showing here. So on the moderate downside, we're down about 2.5%. We've got a more severe downside, which is essentially if there is an escalation in the Middle East, if inflationary pressures don't come down, and essentially we move into more of a mild to moderate recession, that would pull production and obviously demand levels down more substantially. There's an upside scenario here. It's a 1.5–2% range, and that really is just accounting for things slightly better, an acceleration of the reduction in pricing for consumers, and helping to drive those buyers that have been displaced back into the market. So that's kind of what we're looking at it from a range, at least in the short term, out through 2025. If we look at it from 24 to 25, so we saw country ranges from 23 to 24. If we take that from 24 to 25, where we're essentially flat to off slightly in 24, we've got about a 2.5% growth rate in 25 to 92.7 million units. And for next year, right now, all the major markets are expected to be in positive growth territory, which isn't the case this year as we showed. So that's across emerging markets, North America continuing the track of growth, and Western Europe nudging just a little bit higher in 2025. From an OEM perspective, the view is also cloudy and mixed depending on who you want to partner with. So what we've got here is red or the pink color underperforming the overall total market. Green is outperforming. So you can see the high domination of the Chinese EV brands, BYD, Geely, standouts from a global standpoint. Although volume next year is expected to slow. BYD is an example, moving from substantial high double digits to single digit growth next year. Eventually that has to happen. Geely, same thing, moving to low single digit growth, but nonetheless continuing to grow. And these are the top OEMs, obviously not everyone. Most of the top OEMs are in negative territory next year. Stellantis might be a standout given the current conditions for Stellantis, and that could get revised obviously under the new management structure that'll be in place or starting to be more in place in 2026 as well. But with the shakeup at Stellantis, there is volume that's driving that. So it's some production, returning Jeep production in North America. We do have some growth in Eastern Europe, substantial growth for some volume recovery there as well. So some of this is just lost volume that has taken place in 24, getting back on track. As you can see, this year's down over 12, or expected to be down over 12%. All right, let's take a longer term view. So a couple things to really start the longer term and just kind of put things in perspective. When we look at the long term, it really is a split between mature markets and non-mature markets. And for the case of this illustration, China is in the non-mature markets. So I think when you look at that, mature markets are recovering. So that light blue line on the bottom, you can see the volume is improving through 26 and then essentially levels off. So we're in the low 40 million unit range, and then it essentially holds there. And as you can see, that doesn't get back to where volume was in mature markets on a pre-pandemic standpoint, which capped off really around 44 million units. So we're below where the market was in 2028, and we expect that to be the case throughout the forecast horizon here through 2030. All of the growth then is concentrated in the rest of the world. So the emerging markets, including China, so that's picking up obviously growth in India, growth in the ASEAN market. There is still some growth expected in South America, though it's not as strong as what it once was expected. But that's where the concentration of growth is when we look at things globally. Now, while this is happening, there's a lot, so if we look primarily at those mature markets, in addition to China, in the case of the BEV transition or the EV transition, there's a lot of noise and a lot of activity going on below that stable, non-growing number. So we'll take a look at what that looks like, if I hit the right direction. First, when we look at that makeup then of production, so that was demand, let's look at how production is essentially scaling compared to 2019. So we've indexed the three major markets to 2019, and it does paint quite a different story when you look at each of the markets. Essentially, the takeaway here is China is significantly outperforming where things were back in 2019. North America is hovering right around where things were in 2019, and Europe is underperforming where things were in 2019. So I think that's one way to characterize those three markets. Trade has the potential to significantly impact this. So that, again, the tariff story could play a role in manipulating where production is sourced from. You could see a stronger rise in production levels in North America if the tariff environment is put in place and expected to stay in place. So before we get to the electrification component of the longer term, just a little bit more on production and on capacity and utilization levels. So one of the issues that we've been talking about quite a bit, and we continue to, certainly with this EV transition, is too much excess capacity. And that continues to be a story. I think when you look at the overall production numbers, we have moderated our forecast in the longer term. So we are getting close to 100 million units, but we're not crossing that from a forecast standpoint out through 2030. And you can see a stable level of over 50 million units of excess capacity over this entire horizon as well. So again, something that is a concern and a risk, especially when you look at it from a utilization standpoint. And when you look at it from a growth standpoint, production is slightly outpacing demand, where some of that recovery has already taken place, but production levels are still only growing at about 1% a year from last year through the end of the forecast horizon. So not enough to really pick up all of that new capacity that's put in place, all that new EV capacity that's been put in place, without removing the ICE capacity. And that's primarily because the industry doesn't know how the transition is going to fully play out, and they need to have both areas of volume there to support what consumers are buying and what the regulatory environment says they have to build. So that balance and that dynamic is creating a relatively inefficient production market. And this illustrates it. I think if you look at where things were, again, pre-pandemic, we were as an industry hovering around 70% utilization. That on a global basis is quite healthy. We got down to 55% in 2020, have clawed back up to mid-60s, and essentially are hovering there through the forecast horizon. So that's picking up some demand growth and production levels increasing, but also the additional factories that are being built that are running much more inefficient than previously because of the need for all the choices in the vehicle types. And the investment in EVs that is, again, creating an inefficient market. Because we're looking at things in scenarios, if we were to pull a weaker demand scenario, so let's say our assumption for pricing to moderate to a level where some of those consumers come back into the market, let's say that doesn't happen, then you're looking at a utilization level that's closer to 60%, and again, still quite inefficient. If we break that down by region, you can see how that is changing over time as well. The end games are actually pretty close to each other. If you look at the market. So again, another made up region, Asia less China, so that is going to pick everything else up in Asia, so India, ASEAN market, Japan, Korea, so forth. Really a fairly efficient market. That's mainly the Japanese and Korean brands that are managing their capacity utilizations at a higher level than typically is the case in other markets. So they're above 70 by the end of the forecast horizon. North America actually has nudged up. Our latest forecast has improved utilization levels out to 2030, but still in the mid-60s. Typically 80% is the threshold we look for in a market like North America or like Western Europe. So still well below that. Europe, you can see low 60s. China in the low 60s as well, and South America improving, but staying under 60%, so well underutilized. Point of all this is there's too much capacity out there for where we expect demand to be, given the dynamics that we're looking at in the EV transition, in the pricing situation with consumers not coming back into the market. Essentially, we're looking at a global market that is functioning more like a premium market than it is a mainstream market. So that takes us into this transition that we're talking about and that we've been updating and changing our views and our outlook, and there's a lot of drivers certainly here. The regulatory environment, we get asked quite a bit, are you a demand-based EV forecast or are you regulation-based EV forecast? And we're a bit of a hybrid. So if you look at the regs, our forecast doesn't meet the regs. But if you look at it from a demand standpoint, it's also what are consumers buying and are they going to be able to buy those vehicles? And we believe they are. So it's a bit of, our forecast is a bit of making assumptions that we're not going to be able to meet the regs in the longer term and they're going to have to get adjusted, or there's going to be another factor that adjusts them. And that's starting to take place. We saw that obviously with the transition to hybrid vehicles. Again, this is more focused on pure battery electrics and plug-ins in the case of China, but generally we are still looking at pressure from the regulatory side continuing, even if it's softened somewhat. So you've got the regulatory side, you've got the brands that are investing heavily into being carbon neutral, being really focused on pure battery electric vehicles, on hybrid vehicles, building capacity, adding technology, battery factories. You've got all of this investment pouring in, and I think we've left the consumer out of this to some extent. So we'll see how that plays. These are some of the issues, and you can tip the scale however you want it. They are both positive and negative issues depending on the answer. But obviously, there is going to be more choices available. I'll talk a little bit about what that looks like, but it's really a push towards more mainstream battery electric vehicles from a pricing standpoint. It's improved battery technology. The infrastructure is a huge issue, especially here in the US, but also in Western Europe. Much less of an issue in China. That's where the infrastructure is quite strong. It comes down to incentives. It comes down to the operating costs, marketing, getting people into the vehicles, the regulatory environment. So again, these can all be positive and negatives depending on what happens ultimately with each of these issues. One of the factors that is improving is just the number of models. So this is looking out through 2035. Globally, the model count is going up substantially. So you can see we've already had a significant rise here, expecting almost 600 EV, these are pure battery electric vehicles by the end of this year, and that rises to over 1,000 as we approach the end of the decade here. So again, the number of models is going to be there as it currently stands and as we're currently expecting in the plans. Those do get adjusted and certainly can as we see changes to the regulatory environment potentially. As we do look at the breakdown of battery electric vehicles and from an expectation standpoint, so what can drive the volume higher or to the point that we're currently forecasting, and this is based on our current forecast, the breakdown of, we put status around the vehicles, so essentially some pricing around the vehicles, as well as size. This is only showing the status, but you can see there's a heavy push towards the non-premium market from a share standpoint. And you can see the growth rates. If you look at the compounded annual growth rates, super premium is off the chart, but it's a very, very small piece of the market globally. You see non-premium is growing annually about 30% each year from last year through 2028, and that gets us to more than half of the vehicles the battery electric vehicles are going to be non-premium. Now, the other component of this is certainly on the size. So if we look at the size of the non-premium vehicles, so again, these are priced in the non-premium market, and the size, if we look at A through C on a global size rating, those are a much higher percentage of the volume, about 60% of the volume through 2026. So there is starting to be more availability in a cheaper, more mainstream market for battery electric vehicles. And that is a big driving factor of where we currently have the volume outlook at. But if that doesn't transpire, or if they are not received well by consumers, then we could see a pullback. And I'll talk about what that looks like. But this is essentially what our forecast is. If any of you have seen my presentations before, you've seen variations of this. This slide, so I've done a slightly different view on the ICE trends. So we've put 48 volt in there instead of putting that in the hybrid arena, just because it functions closer, I think, to a gas-powered vehicle. So as you can see, we still expect those to be in the marketplace by 2035 and account for a quarter of all vehicles. So if we look at internal combustion engine, I say only, but it includes the 48 volt systems. That's what that accounts for. Your full hybrids, including mild hybrids, through battery electric vehicles we expect to account for 76%. So 3/4 of all vehicles by 2035. And you can see the BEV is about half of that globally. Again, the big push is China. The big push is also Europe. US falls behind that. But that slow transition in terms of moving additional capacity in is expected to transpire. So it gets us to about 50 million units of pure battery electric volume by 2035. But what I did is tried to characterize the risk associated with that. There is some downside risk. So we've got about 15 million of downside risk to that number, pretty substantial downside risk, with about 10 million of upside potential. So that's a pretty wide band. I think when you look at that, obviously it's more than 10 years out, and there are a lot of variables that need to be sorted out before we see exactly how this plays out. But I think that just illustrates really what the industry is having to deal with in terms of trying to plan for a transition to a technology, including the infrastructure, the supply base, everything associated with it. There's a lot of risk, I think, associated with the industry and this transition and ultimately how it gets there. We do think it will get there, but it's just a matter of how quickly and to what extent each of these markets play a role in that. And that's all I have for you, so thank you very much.
Thank you so much, Jeff. Always enlightening. And did someone talk about disruption already? I'm not sure we talked about that. So as you can see, the forecast, the positive part about it is that I think overall total volumes might be okay. It's that mix, right? And so that's where we really see this big disruption is being able to kind of handle this high mix, low volume. And so I'm very excited to have with us again here Charlie Clevenger. Charlie's been leading our business optimization practice for a little more than 2 years. And I can honestly say I've been doing this a long time. And Charlie is one of probably the most gifted individuals that I've worked with on a shop floor and dealing with procurement and total business. And so we have worked through some of these issues with some of the clients in this room, actually, around how do we deal with high mix, low volume? How do we foster a culture of continuous cost improvement? And so Charlie just brings a wealth of industry expertise. And I have to say, he's not a consultant, actually. He's someone really from industry that has done it. He's lived it, breathed it, done it. And so I'm really excited to have you join us with Charlie Clevenger and kind of really start digging in and dialing in here about fostering a culture of continuous cost improvement. Thank you.
Well, good afternoon, everyone. After that, I think it's all downhill. By the way, I don't need all 4 bottles to speak today, so we're not going to go that long. I know we've got a hard stop at 3:30. We're going to take advantage of it. But Tom, thank you. Appreciate that very much. So let's talk a little bit. Since we're talking about disruption, let's go back to that. I've been at this a little while. When I joined UHY, they advised me, don't tell them how long you've been working, just tell them it's more than 20 years. And so that's what I've learned to do. But I will tell you, in my career, I have never seen a situation where we had a combination of economic factors, geopolitical factors, and an industry in transition like we do now in the automotive industry. And so your ability to improve, your ability to compete, your ability to change, as you know, is becoming more and more important. It's true for all of us. So we're going to talk about some of those areas in the next few minutes. Going to focus on operational efficiency, procurement strategy, but more importantly, we're going to talk a little bit about the soft side, about managing change in an environment where you have to focus on continuous improvement. And then after the break, my colleague Ted Mabley will come up. He's our expert in the cost area, and he's going to talk with you about a few of these other areas. What we're not going to talk about are the normal common continuous improvement tools. We don't want to focus there. We want to focus on a little bit bigger picture today. I think you're pretty familiar with those, and you don't need a lot of help with that. Henry Ford, an icon in the industry. He was a very quotable individual. I know 2 of his quotes. The one about you can have any color you want as long as it's black. I like black, but I don't think Mr. Ford would be probably hired in anyone's marketing department today. His other quote that I know, though, is this one, and I do think it's appropriate for our discussion on continuous improvement. A little over 100 years ago, he told an organization, if you keep doing what you've always done, you'll keep on getting what you've always got. And I think the environment we're in today, that's exactly what we don't want to do, right? But it is a healthy approach for the discussion we're going to have today. Tom, Dan, and I think Jeff as well. And by the way, I have very few numbers in my charts. Once I saw that I was going to be following Jeff, I knew I couldn't compete, so very few numbers in my charts. But we've talked about 3 things, or 3 potential strategic options for you as you go forward. One is to adapt in the automotive space. A lot of talk about high mix, lower volumes from an EV versus a gas engine standpoint and from a hybrid standpoint. But it's not just in that arena. If you look at trim today, the competition between chrome and paint, the variety there. There are a lot of manufacturers in this space, including many of you, that have to deal with that diversity. So you've got a market that's, as Jeff pointed out, it's relatively flat, honestly, in North America, but yet you're seeing increasing proliferation. That's a challenge. That requires us to change and adapt. You can go after new markets. I know some of you are doing just that. You're moving into the defense sector, for example. M1 Abrams main battle tank transmission, or I used to make the transmissions, that's the tank. I've had this experience. We could spend a few hours just talking about what that's like to be in the automotive space, and lead a business that is designed to take automotive technologies, move them into non-automotive sectors. Things can be very different, and it requires a significant amount of change to accomplish that. You might find that your material systems don't work well. As we went into the commercial HVAC market, we learned very quickly that we didn't get 12 to 16 weeks to deliver prototypes to our customers. If we wanted to be considered in their programs, we had to do it in 2 to 4 weeks, and we had to learn to change to accommodate what their needs are. They weren't going to change for us, we had to change for them. And then finally, you have the option of expanding globally, geographically, and following your customers, which I personally think is a good strategy. I've lived more than 8 years abroad, a little over half of that in Europe, 3 years in China. And I will tell you in my experience that US companies are as well equipped as any companies in the world when it comes to moving abroad. Say what you will about where we are in our country today. I will tell you, I'm convinced that we are more open, more diverse, and it shows when we move abroad. So all three of those are good options, but again, they all require you to change and they require continuous improvement. So Tom and Dan talked a little bit about what are the things that are important to you as you focus on developing a robust environment of continuous improvement. As Tom said, the last 2.5 years, I've had the pleasure of working in this capacity. My friends who are back in industry actually find it kind of amusing. I was death on consultants over my career, and now I'm one of them, so I hear about that quite a lot. But as we've worked with mid-cap suppliers, including some of you, mid-cap manufacturers, there are 8 things that come up. Now, we don't see all 8 at once, obviously, but I think there are 8 things that are worth talking about today, and these are keys to being able to succeed. The first 4 are really more soft side, a little more strategic and a little more people-oriented. Then we'll talk about 3 that are financially important: revenue, cost, and the balance sheet, working capital. And then finally, in the last one, we can talk a little bit about how do we track performance and measure. You can't have continuous improvement without change, okay? And change isn't easy for any of us. About 20 years ago, 2 very different periodicals, Fortune Magazine and Fast Company, both published articles within a couple of years of one another about failure and change. Fortune's, in the way they write, it was titled "Why Companies Fail." For Fast Company, it was "Change or Die," with die in big red numbers or letters. But they both concluded the same thing. And if you can read that bottom right corner there, and I'll read it to you, this was probably the most interesting sentence for me. The core of the matter is always about changing the behavior of people. If you can't change your organization, you can't change your people. You can put the best tools in place, you can have the best strategy, but this really is a very important part of the process. So when we work with companies, we usually start here. There's a psychology professor who recently retired from Oakland University, and Ross thought maybe I was a little bit too hard side in one of our conversations. And he said, "Do you ever invite your team on to the journey? Are you directive, or do you invite people to participate with you in that process?" And I thought about that, and he made a really good point. So I've tried to be better at it. We work with a number of mid-cap manufacturers, and I will tell you that only about 1 in 10 really do this well. Now, I understand that many of your companies are private companies. You've got confidential information and so forth. But if your management team and the people that report to them don't understand what it is that you are trying to accomplish and where you're at in your journey, they're going to come to their own conclusions. And usually those conclusions are going to fit their paradigm, like everything's okay. What do I have to worry about? Okay. So inviting them to be with you on this journey is very, very important. A lot of baseball fans right now because the Tigers did pretty well this year. It was kind of fun. 7 games into the playoffs. Some of you are old enough that you might remember the gentleman I'm going to speak about next. Satchel Paige, anybody? Brian, I know you know who Satchel Paige is. Tom, I know you, we talked about it earlier. Thank you in the back for that. Satchel Paige was a pitcher who grew up in the Negro League, and he only became available to play in the major leagues late in his career. In fact, his first game in the major leagues was in 1942. Well, pardon me, he was 42, it wasn't 1942, it was about 1942. His last game in the major leagues, he was 59 years old. He holds the record for the oldest player to participate in a Major League Baseball game. It was an outstanding pitcher. He was also a very colorful individual. I was looking for something today that I thought represented the ability to grow and persevere and change and be competitive. And I came on Satchel and said, you know, this is a really good example of an individual, not a business, but an individual who over time adapted, competed, and managed to do it for a very long time and very successfully. There are manufacturing companies that are in the same category. A.E. Raymond has been around since the late 1700s, French company. They started out making those little stamped eyelets in your shoes and boots. They do a whole variety of things today. But if you really want to succeed, it's not just enough to look internally, but you need to look externally as well, in our opinion, and you need to understand where your competitors are the way Mr. Page did. One of the questions we like to ask early on is, who's your best competitor and what do they do better than you? I'm usually surprised that I get a really quick answer. You know, it's this company and this is why they're better than us. This happened just a month ago. Yes, we've got a Canadian competitor. They are 25 to 30% better than us on price. So then we ask the question, why? Well, they are vertically integrated and they do a good job standardizing their hardware and components to reduce their cost. Next question, can you do that? Well, yes, we can do that. Now, this is a company that had lost 50% of their revenue over the last 3 years, in large part due to their competition reducing their cost and becoming more competitive. So when we're building a plan for continuous improvement, we don't want to just look internally, we also want to look externally and see who is best in class. It can have a huge impact on your approach. You know, back to that non-automotive business using automotive technologies. We had tremendous success. In the North American commercial HVAC market, we were the sole supplier of our technology to 7 of the 8 largest manufacturers in North America. We almost had a monopoly. One of our customers, however, only bought about half of their product from us. They had a different set of requirements, and their requirements included cosmetic requirements that we wouldn't typically see in the automotive space. Now, our engineering team had grown up in the automotive sector, and they didn't think that these were appropriate specifications. But then one day, our one remaining competitor that had any volume met the requirements, and it stunned our team. We really didn't expect it. A few months later, we hired one of their manufacturing engineers who was out looking for a different job. And what she told us was this. She said, when they came to us, the customer, and said, we want this level of cosmetics, we laughed, which is what we did. You know, these are commercial HVAC units, they're on roofs and things, nobody's looking at them anyway, right, once they get up there. She said, but they kept coming back asking the same question, and you guys had most of the rest of the market, so we said, why not give it a try to figure it out? And we figured it out. Suddenly they had an advantage on us, and we had to understand why and how they were capable of doing that. So, you know, I can't stress enough the importance of not just looking internally, but look externally. Find your best competitors and compete with them. It's very important. This next chart I've been thinking about using for a number of years. It gets to goals. It actually hangs on the door in my house. About 10 years ago, I was in a very cold Sault Ste. Marie, Michigan, with one of my sons who had decided he wanted to be a hockey player. And I opened my hotel door on a Saturday morning, and this was on the door. An enterprising teen mom had made these, and it says, "What's life without goals?" You know, it was about hockey then. For my children now, it's about life as they've gotten older. You know, we keep asking the question, what's life without goals? So 10 years later, this hangs on the door, and we still talk about it. I may never take it down because I just think it's great, the double meaning. So the first company that Tom and I worked with, as part of my coming to UHY, I remember you and Steve telling me, boy, we got one for you, and you did. We went up to visit this company. This was a manufacturer, automotive-based. They had really lost their way. They'd been hit hard by competition out of Asia, lower cost competition. They'd lost a significant amount of revenue. They hadn't responded by competing. The owner was putting in operating cash, which is never good. The company was unprofitable. And it's the only company in my entire career, and I've been in factories in over 40 countries, where I walked the floor, and not a single person even acknowledged that I was there. No tip of the head, no hello, nothing. It was like we were invisible when we went through this company. So this was a great challenge. So we sat down and said, all right, what do you want to do? Well, they wanted to do a few things. They really wanted to become competitive again. It had hurt that they had lost all that revenue to overseas competitors. They felt like they could be competitive in an adjacent market. So now we're touching on two of those three strategic areas. And the one they thought they were best suited for was commercial vehicles. They wanted to become profitable and strong. And then finally, back to the company culture, we talked about the fact that, hey, this culture needs to change. They set those goals and they went to work. And we'll come back to that here when we talk about metrics and results. Pardon me, I went too fast on the button. So I want to switch from more of the soft side to a little bit of the hard side, and we'll start with revenue. We have a couple of names for this phenomena. I think Tom calls it the commercial spiral of doom, so or spiral of death, I'm not sure which it is. We run into this frequently. Our revenue goes down. Our finance team, apologies to the finance folks here in the room, because I know some of you. We re-roll standards. Our costs thicken. We then become less competitive. We go out, we don't win business, we lose revenue, so our revenue is down, and then we repeat the whole process. It's important in dealing with revenue and continuous improvement to understand where you want to go and build a pricing strategy that will help you get there. It doesn't necessarily have to be the pricing strategy built on your costs at that exact moment, but if you do have a good, robust plan for cost improvement, this is a great way to avoid that. I literally a few months ago had the argument with the president of a company. He was adamant he had to roll standards. I said, well, what's going to happen? Well, our prices are going to have to go up. And you just lost 15% of your revenue year over year. What do you think is going to happen? Well, we'll probably lose more revenue. Does that make sense? No, we didn't roll standards. From an income cost standpoint, I'm learning the mid-cap industry from a different perspective than what I had in industry, but the area that's frequently the best to start in when you want to improve cost is the area of material cost and procurement strategy. And this is really kind of natural. You start a business or you acquire a business. You're focused on manufacturing technologies, you're focused on products, you're focused on customers, building relationships, building brand recognition, creating revenue, creating a foundation for your business. Purchasing and procurement tends to move down the list a little bit, and it's one of those later things that come along. You don't have to be a large company to use very effective and successful best practices in procurement. They're available to anyone, whether you're a $5 million business or a $5 billion business. I think about it this way. If your company is 50% material to sales and you are able to improve your material cost by 10%, you've just added 500 basis points of income, of profit to your bottom line. And we see this all the time with companies that adapt in this area. It's actually easier than working on the factory floor in a lot of respects. So we'll switch over, we'll talk a little bit about the balance sheet and working capital. When we look at a company for the first time, we tend to do three things. We look at the financials, we walk the floor, and we talk to members of the company, which doesn't always include just leadership, by the way. I really like to talk with shipping clerks. They're very, very interesting. They know a lot about what goes on in a manufacturing company. When we look at the financials, my personal preference is I look at the income statement, I look at revenue, and then I stop. And I go to the balance sheet. And I look at the receivables and payables real quick, but then I focus on inventory. And I immediately start wading through to look for as much information as I can get on inventory. Inventory is a great indicator of how well your business is functioning. You might be profitable, but you may have problems you don't realize. We recently coined this term, the sales and ops Bermuda Triangle. For us, it's a combination of I have high inventory on one side, but I'm missing things I need to produce and ship product on the other side. And when I put those two conditions together, I end up with upset customers, I end up with premium freight, I end up with overtime, all those excess costs and so forth. We recently had a company that was in workout that, just by managing this area, we were able to help them turn around. So how do you avoid that, especially in an environment where you're going to see increased proliferation? And if you go into adjacent markets like commercial vehicles, that's going to increase your complexity as well. Basically, it's have a robust sales and operations planning process. Two things that we like to say. One is your ERP system is not a sales and operations planning process. It is a tool in that process. The second thing is that we're always looking for balance and harmony between what's happening on the customer side and what's happening on the supplier side. And we want to balance that to the maximum extent possible. So I want to come back to that first client from a little over 2 years ago, and I recognize this is my one tip of the hat to the data that I usually show Jeff when I don't follow you. This was the 1-year snapshot. This company had improved their cost of goods sold by over 12% of revenue. Their revenue was up 10%. They had improved their bottom line by a good $3 million. More importantly for me, they got their first win against some of those low-cost competitors that they had been facing. They broke their break-even point and their cost structure down where they won the next gen of a program that they had lost back in 2015. That was a big deal for them. Culturally, I knew we were starting to turn the corner one day when I was walking the floor and a person came up to me in the factory and said, "We don't have a safety committee. We need a safety committee." I said, "You're exactly right. We're going to get the HR manager, we're going to start that process." A few months later, someone came up. "We don't really have a culture committee. We don't do anything fun. We don't have, holiday meals. We don't have a little thing outdoors in the summer, even though Michigan summers are beautiful." Cool, let's do that. So this is a company now that's growing about 10% a year. They're profitable. The management team is very much aware and engaged and committed to making it successful. And the organization is feeling empowered and they're moving on to the next step, which might involve acquiring one of their competitors. So I could show you lots of metrics charts. We could talk about, revenue pursuit, revenue won. We could talk about material cost savings, but you know what all those charts look like. So I'm not going to do that. So I took a little different course than maybe you expected. But this is exciting for me because this is the way we look at companies when we go in and talk with them. We understand the ownership, we understand the management, we want to understand the financials. At the end of the day, we want to understand what's working well, what's not working well, what needs to change, build the plan, get buy-in, and make it happen. And it's a lot of fun. It's a lot of fun working with mid-cap companies. So with that, I want to say thank you. I think I did okay, Jessica. You're not going to... All right, she's giving me hands up, so I know I'm not in trouble. So thank you very much.
Thank you, Charlie. As you can see, so we can turn disruption into an opportunity. That's our goal. The results that we've seen with Charlie and the team behind him have been, we've been very, very impressed, and clients have been obviously, I think, very pleased. So we're going to take a 15-minute break. Make sure you stick around after our presentation. We do have our track experience rides. So please stick around for that. That'll be a lot of fun. And so we'll take a 15-minute break, and we'll be back at 3:45 for Ted Mabley. All right. Everybody could take their seat here. So, we've been very fortunate. We're continuing to expand our team and our depth. Oops, is that loud? Here in Michigan. All right. There we go. Yeah, as we continue to grow our team here in Michigan, we're very excited to welcome Ted Mabley. Ted brings a wealth of knowledge and experience in really, really getting deep. What I call, and what I grew up with is in costing, from labor rates to overhead rates to pricing to quoting. It's a very, very complex subject today. And so Ted brings a wealth of knowledge in that area, and I'll let Ted even probably expand on it a little bit further, but I'd like to welcome Ted Mabley to the stage here. Thank you.
Great. Thank you, Tom. Thank you. All right, happy Thursday. Hard to believe it's beautiful weather out. I mean, it's like October. Is this like unbelievable or what? Still playing golf. I mean, all that stuff is great. But anyway, thanks everybody. It's great to be part of today's conversation. Who took cost accounting when they were in college? All right, so you know how exciting and fun it is at 8 o'clock in the morning to go to a cost accounting class, right? So again, a lot of the things that have been going on recently have all been circling back to the basics, right? It all gets back down to the fundamentals. And over the last few years, right, with expansion, just ship me the parts, I don't care how much it is, right? Well, guess what? Now they're caring how much it is. So the discussion today is really around the fundamentals in terms of what's going on in the industry, what's going on especially from a cost point, and then really kind of getting things teed up for the roundtable discussion with Tony and Tom afterwards. So again, I'm just going to go through a couple things fairly quickly, and then kind of get into some of the specifics in terms of what's going on in the world of cost. But kind of before that, so I got something for my kids. They gave it to me for Father's Day, and it's for golf. It's for who plays golf? Okay, so it's a yardage book. So it's a yardage book at a golf course I've been playing for over 20 years. So it's like, okay, guys, thanks a lot. It's really nice to you. I'm a former caddy. I walk off the yardage. I kind of know the drill, right? But what the cool thing is all the data around the green. So I'm like, okay, yeah, let's just see how good this thing really is. Now I know why that putt's really fast, and now I know why that putt goes left when it looks like it should go right. And that's the whole point in terms of using very simple data to be able to understand like how fast can your organizations go, how fast can your organizations be profitable, and really, in essence, how to protect your margins. And I think that's one of the most important things that companies really have started to get realized. Again, sorry for the big lot of noise here on the chart, but really the fundamental things are OEMs have made, and Tier 1 suppliers have made huge investments over the last several years in people, processes, and technologies. So they've made investments, like Dan said at the beginning, cost engineering. Tony's organization at GM, as an example, they've made big investments in technology, but more importantly, processes. So how is engineering, purchasing, and the suppliers all working together much more collaboratively internally? And what's the common language? Someone, anyone? Cost, right? How much is that design going to cost us? How much is that engineering change going to cost us? What about the tooling? What about? So those are the big things that are kind of happening, and especially if you look at some of the other areas that they're getting into. They're getting, suppliers and OEMs are getting into that level of detail in terms of what's going on with embedded software, electronic cost, logistics cost, packaging cost, and then on top of all that, we'll get into, at the very end, CO2 data, right? So again, there's a huge amount of data that's coming around, just like my little yardage book around on the greens, how much of this data, how it's impacting companies, and especially from a velocity point, how much is changing so quickly. And like I said, we've got huge increases into organizations. And so GM is an example. So they've added over 100 people in the last couple of years into their organization just around cost. And I've got some examples in terms of how that looks like from other organizations. And we've also noticed a few things over the last few years. It's around purchasing. So the organizations have had a lot of turnover. I don't know how many people have experienced some of the turnover, both inside your organization as well as dealing with at a customer level. But it's gotten very, very rapid. One company, their average is around 3 years for a new buyer. Either they leave or they go up to the next, they'll get a promotion and stay. Or they'll go back, or they'll go to engineering or someplace else. High rate of turnover. So what, from an advantage point, does that make for the supplier? Well, salesman typically has around the same amount of turnover rate. So you've got two very volatile organizations basically negotiating and gone in 3 years. So again, organizations are trying to build some consistency, and they're also trying to build some legacy. You get the legacy through the data and retaining the data and having knowledge domains. So again, those are the things that we're starting to see in terms of what's going on in the industry. Second thing is the cost. How much does doing a quote cost? So if you take a look, and this is just an example, so if you take a look at how much time is required to build up a quotation for a new program, again, taking in consideration product engineering, cost engineering, purchasing, manufacturing, add up all those hours, and you start to add up at a blended rate, $200 an hour, it costs about $51,000 to do one quote. That's just one, again, new program. So you add on ECNs, add on return business, and organizations can easily get to with an internal cost just working on quotes. So again, it begs, is this area been Kaizened? Has it been leaned out? Again, a lot of manual effort, a lot of knowledge, a lot of domain expertise. In many cases, a lot of these folks are leaving the industry. So they've had enough, they've hit the baby boom period, and they're exiting. So a question, again, that kind of begs to be answered, who's backfilling and how to get there? Okay, so as part of that discussion around people and processes, so this is a representative example about from cost engineering alone. So here's where you see how much folks are located in those OEM organizations. So again, with BMW, Daimler, again, those are a lot of people. They've been doing it for a long time. Same thing with General Motors, a little over 300 globally. Ford, same thing in terms of from a size point. So again, those are dedicated resources just for one thing, and that's cost engineering. Now, in the supply base, it's in some cases just as huge. So ZF has over 200 people globally instead of cost engineering. Again, all these companies realize the return on investment for those cost engineers is huge. So they're typically looking at both new business, design work, as well as engineering changes. So again, a huge investment in terms of people and processes and also from a resource point. And when we get into this level of detail, so who's filled out an 1804? Yes. How about a BMW quote response form? Even more fun, even more detail. What about the ZF form and Ford? It's all about the buckets, right? And how much detail goes into the buckets. So material costs, what's being used from a material point of view, labor rates. And again, fully burdened, or is it just whatever you're paying the person today? Or is it 10 years? So how much of those numbers actually go into those quotes? Same thing with burden. What's the difference between fixed and variable burden? They all want to know. There's all big buckets inside those forms to be able to fill out, because that's the mission critical data that OEMs and tier 1 suppliers need to make that information, right? The sourcing decisions. SG&A and profit. What goes inside SG&A? Someone? Anyone? Research, right? Salaries, travel expenses. So that is the bucket for SG&A. And one of the big issues that it gets back down to, okay, what about an engineering program? Well, that's engineering design and development. That's one of those gray areas. Profits and overheads, right? I have manufacturing profits, I got material profits, material overheads. So all those things have to go into the right bucket, and everyone's got to make sure that they hit their ROI. So is the ROI 10%, 15%, 20%? What is it? And again, the impacts. So transportation. I was listening to she's an admiral, and so she was talking about the impact of what's going on in the Red Sea. So Red Sea is shut down, right? Nobody in the right mind is putting Maersk or any of the big companies are sending ships through the Red Sea. So from India, they've got to go around the Horn of Africa. That's 25 additional days that go on a boat. So, and that boat typically would be someplace East Coast, Norfolk, Jacksonville, or Savannah. So you have additional 20 days of inventory on a boat. So you're basically looking at 60 to 90 days of inventory. Who's going to pay for it, right? Big question. So all those things go into the developing the total cost. Now, some questions. I know a lot of bullets here, but at the end of the day, right, from a technical design, one of my favorite little topics here. So, Fleetguard used to be part of Cummins Engine Company, and they sold it, and now it's an independent company. So you think that they would know how much this thing would cost, right? They didn't. So they had a bunch of folks who used to make it in Seymour, Indiana. That plant closed. So all the IP in terms of how to make it, cost it, ship it, left the company. So they had no clue. So you take it apart. Got a nice spring, right? I've got the filter, and I've got the housing in the top. Pretty simple bill of material. And I've got an O-ring. So they had no clue how much this thing should cost. So it didn't take a whole lot to go through YouTube. In fact, up in Flint, was it Tony Flint East? Used to make filters, AC filters, millions and millions and millions of filters, right? But they had no clue in terms of how much their own product should cost. So again, put together a bill of process, found out the materials, found out where the media comes from. Go to Alibaba, you can find a lot of information, right? And they figure out, you can actually see how much the machine rate is just for the filters. So once you start to put all these things together, then you can start to come up with a cost structure. So technical design, what's in it, right? What's in spec, over spec. In this particular product, they had to be, had to be very careful, because from a filter point, right? This is for oil. This thing cannot get clogged up, right? So it has to have a very high filtration the microns per square meter, right? Very, very high. So they couldn't cost reduce this. But they could cost reduce the steel. How'd they do it? They asked a bunch of questions saying, what if we bought the steel ourselves instead of having the supplier do it? So they went to a material resale program. So they save money here without sacrificing the technical capability of the filter. And again, that's like a win-win for everybody. So again, what questions to ask? Got to have a playbook, right? Like a yardage book. Tech design, performance requirements, what can you use, what can you substitute, what can be changed, right, without either going through recertification, requalification. Again, end of the day, how can you save money? How can you maintain your margin? Again, how to be able to go and be successful when you start to get into negotiation processes. And again, we're covering materials, what can be used, what can be substituted, manufacturing processes and tools. How much, right? Where do you get your tools? So we just did a study for a company that buys a lot of high-pressure die-cast components. They're getting it from China, and with everything going on, they were told no more Chinese suppliers. It's got to be NAFTA-based. So they took a look in terms of, okay, how much for tools? So tools ended up, it was about $105,000 from China without any duty, without any freight, right? And North America, let's see, Mexico was about 110, and then Canada, US was somewhere around 125-ish, somewhere around there. So, but what they didn't take in consideration before was, how do you get those tools over from China to here? Program manager, you have to have a full-time program manager, basically sitting on the tool to make sure it's going to work when it gets here. And oh, by the way, they found out the hard way. When they got the tool here and they started working, it broke. So they tried to call one of the tool shops. Tool shops goes, nah, you didn't buy it from us. We're not servicing it. So they had to fly people over from China to go fix the tool. So end of the day, total landed cost, which one was the best? So take China out, right? So you had between North America and you had Mexico. So again, companies are getting into that level of detail, where in the past it's like, yeah, tools, hey, our OEM customer pays for it, who cares? Well, okay, that's the first set. What about the second set? And how are you going to be able to maintain it? Are you getting a tool refurb and your quote for it? So again, those are the big questions that in the past may not have been as important, but now, right, everyone's trying to figure out, yes, it is important where the buckets are, what goes into those buckets, and how can I basically know what's inside those buckets so we can start to maintain some, again, that profit to cost ratio. And then purchasing, again, gets back down to where there's so many new people and high turnover in the purchasing organization. Like Charlie said, it's a great place to go to find where you can get some initial savings. So again, simple questions. Okay, if I'm buying this machine, if I'm buying this part, do I own the line? First question, right? Is it 100% dedicated? Based on volume. Well, based on volume, not really. So if it's, say, capacitized for a million filters, I'm only running 250. So the supplier basically has 50% capacity that they can go sell it to somebody else. They could sell it to CAT, they could sell it to Detroit Diesel, whomever, right? So again, basic question to ask: how much of that line am I running from a capacity point? Because again, if it's a supplier, just say, yeah, sure, it's 100%. We're going to try to make that 100% dedicated to your product. So key questions to ask. Always make sure that you gotta be like a 16-year-old. Why? Why do I have to do this? Why? Same function. It's the same methodology in terms of going through and asking those questions. Dedicated, variable versus fixed burden. Huge area. Again, gets back down to the 1804, the 488 bucket, BMW, ZF. All those folks are asking for detailed burden and cost information. You got to put it on there, and you got to defend it. So you got to know where it came from, right? Really simple, but hard to do. Labor, same thing. I got today's labor. If I put down $34 an hour, it doesn't take much for a good purchasing person or cost engineer to go and, okay, Glasgow, Kentucky. What do you think the average labor rate for Glasgow, Kentucky is? Someone, anyone? 15, 20, 25? 20 bucks? 22. It's the biggest employer is a health service organization. So they were putting $34 on their RFQ for, again, just what they're paying, not fully burdened, just $34 versus 22 what the hospital was paying. And this is unskilled labor. It's not skilled labor. It's not a tool maker. It's not a machine operator. Unskilled. So kudos to the purchasing and cost engineering team that found that. I mean, it was a huge win for them, right? Saying, no, it's not $34. We'll take $23, $24. That seems pretty reasonable, right? So again, asking the right questions, understanding where they are. Again, I think we covered some of the supply chain issues in terms of what's going on. Is it JIT, or are you sitting and waiting on weeks and weeks of inventory? Okay, one more. Make sure I get this. Okay, CO2 footprint. So this is one of the big things that is happening right now, and again, be prepared because this information is going to be much more in high demand and also probably put into much more of a mandatory format. Volvo Truck, Volkswagen, BMW, Daimler, the European Tier 1 suppliers, they're already here, right? They know what this issue is, and they're already working at it because it's a big issue in Europe. So again, we're not going to get into the legal issues, anything else, but it's going to be based on you have to have an understanding about the CO2 issue when it comes to be able quoting and what's going to have some impact, obviously, on costing. Again, most of the work is, and again, and Tony can get into greater detail about what GM is doing, but most of it's actually kind of this, it's in the scope 3, what they call cradle to gate. So it's raw material to basically turn the parts produced, and the part gets to the vehicle, and eventually the OEM's going to have to do all the roll-up on CO2 and put together those numbers back into the local, into the federal governments. So again, we're just going to focus on some of the issues when it comes to design, transportation, and manufacture of a part. So again, these are all the connection points in terms of where that CO2 comes from, just like it's like a regular cost estimate. Same thing, same components, right? So I've got material, I've got supply chain, I got manufacturing process, bill of process, logistics, and I've got overheads. Nothing's different. So again, what kind of materials, right? So you've got, is it metal, polymer, is it going to be glass, overheads, same thing, material overheads, production overheads, transportation logistics, how it's going to get there, and also from a manufacturing process. Where does the electricity come from, right? Is it clean, is it green, or not? We use an example here, filter housing. So here's the material. It's made of aluminum, right? That's the process. I got to melt it. I've got to put it into a holding furnace before it goes into the high-pressure die casting machine. I got to clean it. I got to then take it from wherever it's got to go. It's got to get machined. It's got to get cleaned up. It's got to get put into some sort of a dunnage, and it's got to go to the customer, right? So that's high-level process for this particular filter housing. So let's take a look in terms of where would you think this thing makes the most sense to source from. So again, from high level, here's your die casting numbers, right, from the material out of the ground. Your processing, high pressure die casting, those are your overheads in terms of from plant overheads, and your logistics. So your total CO2 footprint for this very, very simple part, right, where does it look like? USA, China, and Germany. So again, where is it makes the most sense? Starting to take a look at some balances around, right now. So, Germany at 9.10, North America at 10.76, and then China at 14.11. So let's put transportation together. Now, this is where the whole thing starts to change once again, right? So you're going to now start to put together the footprint, getting parts from different parts of the world to where you're built, or so where you need it. So again, in terms of the material price is around the same. That's not going to change too much, right? So again, if you look at it, the cost of that part with the CO2 as aluminum die casting from different parts of the world, it's going to go up and down, but somehow, some way, I've got to record that CO2, I've got to put it into the RFQ document, and somebody's going to have to hold me accountable for it. Where'd you get your numbers, right? So I'm liable for those numbers, just like I'm liable for the numbers that goes on the quote. So again, how are you going to get there? There are ways, there's tools, methodologies to be able to utilize that. And again, the whole point is, it's coming. If it's not already here, it's coming. So, around the world, from a filter housing, golf course map, to CO2. So I hope that's beneficial in terms of kind of where the world is right now from a cost point, and looking forward to have some conversations afterwards. Any questions? With that, Tom, Tony.
Thank you, Ted. I know that's, costing is a near and dear to my heart, but it's a very technical and deep subject, and, it's becoming more and more a focal point. And so I'm really excited. I can't tell you how excited I am to have on stage with us Tony Miller from General Motors. These chairs are a little...
Make sure I don't fall off.
Yeah, make sure it don't fall down.
You better
fall out.
reinforce this chair a little bit.
But really excited to have Tony here. It really stemmed out of a relationship from Ted and maybe a project that we might be working on with General Motors. Ted, Tony, I want to, why don't you share a little bit of your background, do a little intro,
Sure.
just how you found your place at General Motors
Sure.
in cost and program cost optimization.
First and foremost, you guys are going to be shocked, but I generally stand up at our all-people meetings. We get 300 to 500 people there, and everybody wants to know, how did you get to where you got to, right? So I ask people, do you think I started in manufacturing, R&D, purchasing, cost estimating, or a police officer? Well, the answer is police officer. Believe it or not, I was a police officer for 3 weeks. Now you all can laugh. But a guy I played football with, his dad used to come to the football games, and I played at a Division I college here close to town, and I thought the guy ran GM back then. I mean, he just carried himself like he was a CEO. But it turns out he was the director of security at General Motors. And so he found out I got a cop job, and they hired cops to be undercover. So where we're sitting today used to be a factory, and I used to work here.
Oh my
So
gosh.
we used to build the
That's right.
mid-sized truck here, plant 3, 4, and 5.
That's right.
There was a building right here that I used to sit on top of at 4 in the morning and watch people do things they shouldn't be doing. Right? But I also was the supervisor inside the factory. So my days were 12 to 16 hours every day for a long time.
Wow.
So from there, great story, but my boss at the time said, you'll never be anything at GM if you're not an engineer. He had no clue I was undercover. So I decided, well, you got to go back to school to be an engineer then. So I did that and then got my MBA and got another master's degree and all that. But the reason why I told you the story is because if you want to achieve something, go do it. Go get after it. I also coached high school football for 26 years, and we won state championships, not because we had the best talent, because we instill a process. And when you want to go do it, and do it well. And so from my manufacturing supervision experience, not cop, but I was a manufacturing supervisor, we sold that division at GM, and we had to be absorbed into the company. And then from there, I chose to go into manufacturing, the engineering side, then to product, and then I begged them to put me in finance. And that's where I am now. So cost estimating at General Motors is in finance. And I will wholeheartedly say 200% that is the only place for cost estimating to be. And the reason why I say that is because it's judges' chambers. You have manufacturing over here, you have purchasing over here, you have engineering over here. And if you let any one of those three control it, good luck to you. It's like the rooster watching the hen house. I mean, it's just not going to work. They're going to protect, the data's going to get skewed, things are going to happen. So with that comes a lot of, I'll say, passionate discussion, right? And that's what happens. In fact, I just made this comment here. I'm going to get a tattoo before I die. I don't have any tattoos yet, but I'm going to get one, or someone's going to write it on me as I go down. We negotiate internally harder than we negotiate externally. Believe that, because we do. And the only thing that I will share with you is that the only thing that wins that negotiation is data. You heard Ted talk about it. When I got to this group, the only reason why I got to this group is because I used to be in capital finance, and we spend $15 billion a year. That was all on me. And our CFO at the time, we had never been green in 2 quarters in a row in the existence of General Motors. Believe that. Never been green forecasting $15 billion in 2 quarters in a row. Now, what does that mean? Nothing bad. Just if you were going to spend $1 today for your house payment, you're probably going to pay $1 next month, right? Because that's your house payment. You have to believe that our people couldn't get that right. They'd say, well, I'm going to spend $1, and then they'd spend 60 cents. And then I'm going to spend $1, and then I'm going to spend 60 cents. And then I'm going to spend $1. Well, pretty soon the forecast is just trashed. So we put in a process. And we put in a process that was pretty evil. So a couple times we had our program teams, as you guys all know about cars that go down the road. We have program teams that come in. And they were coming in asking not for $1, but for millions of dollars, tens of millions, hundreds of millions of dollars. And I said, this is just absurd. There's no reason for this. I got that opportunity to now leave capital finance and go into cost estimating. And for the last 7 years, we've been building a process. That's how I obviously came across TED. We use a system, we use a process, and we negotiate very, very hard internally. It is not fair in today's world that we don't have transparency. Because I will tell you, we are in the fight of our life. And more to my story about where I worked here, my dad was the president of this union for all truck plants. Now, you want to buy tickets to Thanksgiving dinner, those were the best ones. My family would always figure out who's sitting where because there were some good debates.
Yeah.
Now, God bless his soul, because he just passed away. He tries to tell me, he retired in 2002. He tries to tell me all the time that he thinks he knows. The factors from 2002 until now are completely different. Back then, it was Ford, Chrysler, GM, really. Now it is literally everybody's building cars globally. They're bringing them in. They're importing. It is just a brutal fight right now.
Yep.
But I will tell you that I firmly believe everybody comes here for engineering. So we got the right skill set here. It's the transparency that we have to get right. So that's how I started here. That's kind of who I am. And we have a team that we started out with 70. We're at 340 globally now. So we're putting a lot of emphasis on cost. And I will tell you, for the most part, every meeting at our company is about cost. And it's not taking features away from the customer. It's about getting real and getting transparent. And there's a couple questions that, I'll just jump to one of them.
Okay.
The point is, what do I think suppliers are doing wrong? It's not for me to judge. It's not for me to, tell you how to do it. But what I'll tell you is that just because you sold something for $1 last time doesn't mean it's $1 this time. And the reason why I say that is because the tools are different. And I have this within my own staff. We have tool makers, we have engineers, we have accountants, I have old FBI people. I mean, our staff is diverse because that's what I think you need to get to the truth. And what I tell my old tool makers, because they're very reluctant to give away their skills, because they're not very good on the computer, and that's where everything is. So that tool's there. But I tell them, the CNC machine was developed when a blacksmith used to do the work, or a steel millwright used to do the work. But now we program that CNC machine, and we go home, and we come in tomorrow, and the block's already cut. It's no different than what we're doing. So give me all your inputs and let me put it in the process, and then let's run the process. And for those that don't want to elaborate on their skills, they're probably knocking on your doors, because that's what we need to drive out the truth and the transparency of cost. And I'll stand up here with wholeheartedly tell you, we are never in the business to put anybody out of business. In fact, if you go back and ask our team, I'm probably the biggest advocate for most suppliers. I'm probably your nemesis as well. It goes both ways. But if the data says this, I am in the highest levels of General Motors saying, pay that, or go get that. It goes both ways. And I think my best relationships are the ones that can get to the data and not get to the smoke and mirrors. Very important to this cost process, especially right now. And obviously, I'll share with you the way we do our business, we build a model. So think about all the components on the car, we have a model. Is it the best model? I'm not going to sit here and tell you that. But I think the difference of what we do today versus back when we had some leaders that were just brutal, and I think there's a brutal leader in this town right now who's running a different country, a different company. He's tough, I get it. That's not us. I'll be the first one to come sit with you and say, help me understand where this isn't right. And if the answer is your process isn't what I've modeled, then that's probably your first tell, as you've heard others say, you better start innovating. Because that means somebody else already modeled it. Yeah. Okay? My team is not allowed to go and pick a station 10 from company A and a station 20 from company B and a station 30 from company C. It is not allowed. It is build to print. Tell me what factory that process is. If that can't be our discussion, man, we got different problems, right? I mean, that's the best of transparency. Now, the other way that we talk about that is let's work on that together. Maybe we can help you. I will also share with you our tools, the way we do things. Today, there's a difference that you'll hear people talk about, market price versus should cost. And I understand that there's a difference. We're not there yet. What we offer today is market price. We're not at should cost. I'm not in your factories or suppliers' factories depreciating equipment yet. I'm going there, there's no doubt about it. Because I challenge my team, 3% year-over-year reduction all the time. If not, you probably aren't getting a raise. I joke about it, but that's the analogy that we use. Now, if it's 3% year-over-year and we just had inflation at 7%, you better find 10%.
Tony, in your models, when you're doing your build-up, are you looking at costs globally?
Yes. So region of build,
Okay.
right? So we call them cost knowledge management standards. So we have regional factors for each region, and that's how we cost it. So when we get told by purchasing or by the supply base, wherever they're going to build it,
Okay.
we factored it.
But say for a supplier that's here in Oakland Township, are you comparing their cost buildup to a manufacturer in China?
No.
So you are doing it,
Market right here.
that's what I thought,
Yep.
by region.
Yep. And
So we hear that a lot, like, it's global pricing,
Nope.
they're using China
100%
pricing.
convicted, absolutely not from our company.
Okay,
Where it's being built are the factors we use. Now, I got to elaborate on that.
there's more,
As Ted just asked you about the labor rate in Kentucky. You guys would be appalled at some of the labor rates I see coming back. And I think it's because maybe in that previous discussion I said about the part that cost $1, maybe you got away with it. That's fine. But the tools are different today, right? You can Google. You can do so many things to find out what cost is. Technology is hurting everybody,
yeah.
right?
Yeah, that's true.
I mean,
Yeah.
you have the ability to go out and look at job boards. And they're charging me 35, or trying to get $30 an hour, 35, and there's a hiring spree for $19 an hour. Are you kidding me? And again, I recognize certain things, volume, capital investment, all those things, right? All things that come to the discussion. And I have to say this because I think it's only fair. If you think General Motors spends billions of dollars to develop cars, to not sell the volume that we think we're going to sell, not true. But I'll tell you that I've started a process with our planning team, which they're not very happy with. But I said, you know, we talk about scrap around here in a lot of areas. Manufacturing, engineering. Okay, guess what? Your scrap is the way you miss volume. So we're going to start taking 10-year views of this and start manipulating, forecasting that right information. Very important, Because if you come to me tomorrow and tell me you're going to sell 10 cars, but the data over the last 10 years says you're always off by 20%, we're going to focus on 8, okay? We're going to take it out of your hands and help you, because that's what I think we need to do. We need to all get that truth and understanding immediately.
Yeah. I would say, from a standpoint, what advice could you give to suppliers, that are, we have a lot of middle market suppliers that I feel don't always have a great handle on what their costs are. I guess, what do you see from suppliers? Is that a real reality, or, what advice can you kind of?
It's a real
provide?
reality,
Yeah.
without a doubt. And if you're a CFO in here, I would challenge you that you got to really figure that stuff out, right?
You got to know your costs.
You got to know your costs.
Yeah.
And quite frankly, what I think I get to see at the end is the business case versus the cost, right? Somebody's wanting to make a certain profit, right? But our 1804, that's our cost breakdown. You kind of saw some of the detail up there. I call it the recipe. The recipe is really important. It's not about the dollar price at the bottom. It's about what makes up that dollar. And the reason why that's important is because when you have a semiconductor issue, or you have a geopolitical issue, or you have a material inflation issue, I know the CFO really, really well. I've never been told no once, not once. And that's because I probably have trust now, and I probably have data that I can use. But if you walk in and you ask General Motors for a relief on a claim or whatever, for whatever reason, and I go pull that 1804 recipe, and it looks like 99% of them do, good luck. That's not fair. It's not fair because your material's wrong, your labor's wrong, your burden,
Yeah.
you guys all hide your burden. Got it.
We do?
I can't wait. I can't wait till that truth and transparency gets out there. I really can't wait, because we're going to have to get there, I promise you. Otherwise,
Yeah, I mean,
It's
obviously
gonna
there's,
happen.
yeah, I mean, there's, like you said, I mean, the automakers are in a fight for their life.
we are.
And cost is, it's really in view. And, it's essentially, obviously this past, coming out of COVID, the amount of price increases that you've probably seen from suppliers is, incredible, right? But we tried to encourage our clients to first look at themselves, to truly understand, could we be more efficient? Do we really know our costs? And is it is it really did materials really go from $1 to $1.50? That's a real, when you get those, that's kind of the elephant in the room about price increases, obviously.
Yep.
Are you focused around really the material component, or do you have some, sympathy, maybe is the right word, around labor or overhead, or is it, or is it just a
That's a
very
great question.
hard line?
Yep, no. I'll tell you, up until probably last year, we probably did a lot of things different, where people would come forward with a claim, act fast, do things because suppliers needed money, right?
Right.
I mean,
Trouble. Right.
troubled suppliers need money. The last thing we need to do is go move business. That's going to cost me double that check I could write. But I think to answer the question is, it's not just about the material you're bringing forward now, right? So yes, maybe inflation did go up. Maybe it drove the material up. Maybe labor did go up. But when you come to a holistic view of that 1804, that cost breakdown, I'm going to ask you a lot of questions. So how old's your equipment? Did you depreciate that yet? You're making money there, but then asking me for money here, right? So if that transparency gets level set, we pay the right price. I wholeheartedly believe that. Not because I'm wearing a GM badge. I wholeheartedly. We have humanitarian people that work at General Motors. And when the data says it, we act on it.
Yeah.
Other than volume. I'll say this 1,000 times, other than volume. We never guarantee volume. There's no automotive manufacturer that I know of that guarantees volume.
Yeah.
Because we don't have that tarot card. We don't know. We think we have an understanding, and that's hard.
Yeah, and I know, obviously, I think one of these other companies in town, there's been several litigious cases against suppliers. And I speak from my experience. GM has been, I think, much, I don't know, easier is the right word, respectable to work with than the other suppliers, for sure. What do you think, how is that, you think that's your team, how have you developed that to be more aligned with suppliers, right? To be more, instead of the, really combative, which we've seen. Obviously that supplier relationship is so important, I think.
Very important to us, yes.
And I see it with our suppliers that are, fearful to do some work with some other OEMs because of that. What has GM done internally to?
So believe it or not, that's a perfect question because it's 4:30, and every Thursday at 4:30 I go into the supplier review from 4:30 to 5:30. And it's literally about suppliers coming forward trying to get issues resolved. And I think what we've tried to do, I go back to that story I kind of told earlier, help me understand. Give me that 1804 cost breakdown. If suppliers come forward with the right data, we look it over, we have tools that we use to compare it, and we come back and say, seems right, pay the bill. We also come back and say, you've overshot the runway. That's not fair. So it goes both ways. I won't share with you the money that we've paid out in the last 3 years, but I guarantee you'd all fall off your chairs. I guarantee you. It is not small.
No.
But I will tell you, going forward, it's going to be different.
It's going to be hard.
Because we are now in the position where incentives are starting to come back. Things are starting to change. The GM bank is closing down. We're an auto manufacturer. I tell people that all the time. We're an auto manufacturer. We're not a bank. That's important for people to understand because that's something we have to work on together. And again, I go back to if you are transparent, you let me come into your factory, you let my person into your factory, you don't shut the doors because you know I'm going to get somewhere, we're going to get along real well. Because at the end of the day, those models that I spoke about help drive sourcings. They help drive all these things that follow suit of automotive manufacturing. I literally just presented something on suppliers, maybe some you are affiliated with. We're going 7 rounds of sourcing. Are you kidding me? Think about that. Talk about inefficient. And it's the tactic, it's the game, it's all that. Well, did you guys see there's 50% capacity out there too? Like, understand that we see that. We know what we're up against. We know where we could start shopping the business. We don't want to. But we can't be in these inefficient games back and forth either. So when these suppliers come in, we parlay that into a lot of things, and we strictly, again, go back to the data. Other things that we're using now is the analytics. So if you're not using analytics, I'll say it again, if you're not using analytics, if you take one thing away from here, start getting into analytics. It is important for your success.
So when you say analytics from?
What are you buying things for?
So competitive market analysis. Okay.
Right. All your cost, right? I mean, think about it.
Kind of what Charlie spoke about, yeah.
Exactly. Tools that we didn't have years ago. I can tell you, if you're a company I deal with and you sent me 1804s, I got everything on you. It's like the FBI. Right?
Great.
I know on program A, you charge me this. On program B, you charge me this. On program C, you charge me this. Is it in the same factory? Have you even unbolted the machine? No. So it's like we're now getting ourselves in position to say, let's get real with each other. And the reason why I think that's important is for the success of the industry. We don't want to source in China. You guys know about China and resiliency and all that other stuff that's happening. Geopolitical reasons, we don't want that. Ted has actually showed you that it sometimes costs more to go there. Yeah, it looks good on the surface, but when you get total landed cost and you get all the risk, that's not a good solution. And quite frankly, years ago, I was in engineering. We outsourced a lot of our engineering to India. That lasted about 7 years. We pulled it all back. Why? India raised the price. I think China's getting there too. Yeah. China's starting to raise things because they can see where the leverage is. Perfect for us. Let's get it home. Let's get it here. Why? For those of you that were going through COVID, General Motors stepped in and started building Ventec, I forget. The ventilators, right?
Ventilators,
I can remember where I was standing when I got called by the leaders of General Motors that said, let's establish a team, we got to go do that. Why did I bring that up? Because we need the talent in this country. The ecosystem is getting shrunk from tool makers to talent. We don't want to give this stuff up. But I also say to people, we used to build jeans here too. We used to build washers and dryers here too. We used to have aspirin here too. I mean, so cars don't have to be built here. They can import them. Like, we got to somehow find that balance. And that's what I think from a General Motors perspective, we are, I'll say, fair, honest, want to listen, want to be fair. I'll show you my model. I absolutely, nothing in my computer is off limits to any one of our suppliers. Not one. But then we're going to drive to it. Then we're going to drive to it. And I think that is so important for the success. And let me tell you a quick story. I got a call, it was right before COVID. So we got a call from our cash guy in General, I'll say GM. And he says, hey, Boeing wants to talk to you. I'm like, Boeing? Boeing plane? He's like, yeah. I'm like, what the hell do they want? He's like, I don't know, but they want to talk to you. I'm like, okay. So I called up somebody, and he said, hey, we've heard about your cost estimating division. Things are, wow, I didn't know that was any good. He's like, no, it's catching noise within the supply base. I'm like, all right, great. Literally, 4 months later, we can finally align calendars with vice presidents.
Yeah.
Right? 4 months. 4 months later. So they all fly to Detroit. 6 Boeing vice presidents.
Jeez.
They run Boeing. They all come in. They want to go to dinner the night before. They must not know me. I don't do that very often. In fact, probably never. Because I don't ever want anybody to have something on me, right? Following day, we show up. My number one pet peeve is to go around the room and introduce yourself. And here's why. Think about when you go around the room and you introduce yourself. The senior member in that room probably has a lot of clout. And when they speak, everybody else shuts up. And that's not how we're going to get better. Because there's a lot of people that have a lot of great ideas. But the reason why I'm sharing this with you, imagine this. 6 vice presidents and 3 GM people. So that's 9. By the time we got through 8, it was an hour and 15 minutes after the meeting started. First kid's born, Johnny hit the soccer goal, I don't know. I said to him, it got to me, I said, you guys all know me. I got one question for you. How much does a plane cost? And it was like this.
Oh, well.
It was silent for 25 seconds, awkward. I said, did I ask a trick question? Silent for another 10 seconds. I said, I'm serious, do you guys know what a plane cost? Silent for another 5 seconds. And finally, one individual spoke up and said, Tony, obviously you caught us. Maybe we don't know. Wow. And I stood up. I went over there. I shook his hand. I said, God bless it. We're in the same spot because we have no idea how much a goddamn car costs either. Okay? We don't know what it costs. We know what we pay, but we don't know what it should cost. And that's what our department is doing. And what I'll share with you is that it's real elementary. Today, we know what the labor rate is. We know what the market rate is. We know what the equipment costs. We know what all that is. But if you're running the company and you're the president and you're the person that's putting that money in throughout your bank account, wouldn't you want to know what it costs? Wouldn't you want to know that if you depreciated, you could save your margin this, or if you could build scale, you could save your margin that? Yeah. That's exactly what we're doing. And that's why I'm telling you, get to analytics, because that will guide you to where you focus quickly. And when our suppliers come to us, it's pretty elementary. We're not going to talk about the 16 items. We're going to talk about these 2. And when we get there, then we find out, is there a trust? Is there a relationship? I can't say anything up here because I don't know the crowd, but I do have a mechanism that I use inside GM, and it's pretty good. It goes with relationships. Think about divorce. Think about bad things that cause divorce. If you're going to stay together, we can either go to marriage counseling and get it right, or we can just divorce. But if people are doing bad things, you got to figure it out. And it's not always about, think about what GM makes. If you don't know, it's between 8 and 10%. And it's only been 10% for the last couple of years because we don't have incentives on cars. There's no bank, and your bankers are in here, there's no bank that would give us billions of dollars to make 8%. The risk is just way too much. But that's where we're at. So we have to do our part, design vehicles that customers are going to buy, try to avoid all these widgets, gadgets, all those things that cost money, and figure out what is the right content that goes into a car for the right cost, and then be able to sell it. I can't talk about EVs because I'd probably get fired, right? I mean, there's just the story behind it.
We took
right?
that off the list.
Right? It's just the story behind it. But I'll leave you with this. I tell people, you can ask me anything you want, but don't ever ask me a question you can't accept the answer to. I say that to my entire staff all the time. Don't ever ask me a question you can't accept the answer to. Don't ask me if you're employed tomorrow, because I might have to tell you you might not be. Don't ask me if you want me to come to your soccer game, because I might not make it, right? It's just think about that, because that's an important question. Because some people avoid that. And I think to get to the truth of transparency, I want to ask you questions, because I want to accept the answer. I want you to tell me, Tony, your model it's FUBAR, it's bad.
Right.
And then I want to say, okay, help me fix it, because I don't want to go through 7 rounds of sourcing. I don't want anybody to be that inefficient. We don't have time to be inefficient anymore. We don't. Where I sit now, people used to have their lunch delivered and water. I sit out with everybody now. It's great. It's awesome. That's the market we're in. We're all one big family. And I think for us to be successful going forward, we're going to have to get closer, but not get farther apart.
I agree.
Very important. Otherwise, I'm starting to use the word extinction, and that's not a good word.
No.
It's not a good word at all. In the competitive pressures that we see, I fly all over the world. It's amazing. People are doing things better. They are.
Yeah.
We can't.
We need to get more productive.
Yeah, we need to be a lot more.
Yep.
And the other thing that I want to share with you, the last thing.
Complacent.
Yeah, specs. You know, when we set out on this vision of this department, when they were just overspending our money and couldn't get it right, and now we built systems, our cost books are within $10. So when I say cost book, I'm talking the material cost for that vehicle is off by $10. When I was in capital finance, they were off by hundreds to thousands. What allowed us to do that? Process, system.
Yeah.
So we set out on a vision that says, okay, now that we understand that, and I'll joke with you, but I came from manufacturing, and I brought Six Sigma into finance. That's all I've done. That's it. We set the bar, and now we just start sifting it down. We had to close the commercial gap. That's the first step. While we're closing that commercial gap with all of our supply base, we're also talking to our design folks, saying, you guys got to help us here, you got to get better here, you got to get better. I go back to that judge's chambers. The next phase is specs. And I'm telling you, I was just at, I don't mean to hurt people's feelings, but CareSoft, there's a benchmark supplier out there, right? Person that runs CareSoft used to work at General Motors. I know him very, very well. I love his passion. And I was in the room with the vice presidents, and I'm literally the lowest peon in there, but I'm there for cost. And this guy walks in, and I'll tell you, I could have stayed all night, because he literally shut the door, and I couldn't agree with him more. He said, I want all of you to check your arrogance at the goddamn door. Okay? I want you to check your arrogance at the door, because I used to be you, and he was right. He said, but let me tell you what I want to talk to you about. Number one, and he's so right, we have so many specs that are in our products for a variety of reasons. BYD doesn't know anything about specs, I promise you. They're just building beautiful cars that they took something, modeled it, did whatever, and they're building it. We have specs in our process because we had a failure at one point. We had to contain it. And if you all grew up in the industry, your boss said, how the hell are you never going to have that happen to you again? And guess what? That could have happened in 1996, could have happened in 2002 or 2022. Folks, I turned to our leadership in that meeting and said, we better understand what the customer's going to buy. That's what we better be doing. And if warranty isn't their number one issue, then get that spec the hell out of the way. Because that's where we're at now. We're in the fight of our life from that perspective. Quality is still important, but the reason why I bring it up is because we're now going into a full court press on specs. And my analogy to our entire leadership team and to my team, look at how many steel specs we have. Do you think the steel mill's out there building 97,000 different recipes? No. They build 41, and it covers the world. Then go find the one spec that covers what we need, or the 10 specs, but not the 17,000.
Yeah, right.
Okay? Those add cost.
Keep it simple.
I'm asking the supply base, if you know about those, bring those to me. That's going to help me. I'm going to be able to help you. Get to that one. I'm going to peel through the dirt to get there fast. And we just had a supplier showcase at GM on a cost-cutting measure. Our VP held it. And my team is now going through the list and cost estimating these options that the supply base has said, get them out. Those are some of these experiences that we want to continue to have. That communication, that transparency, that bond is going to be critical to our success.
I think we're pretty close. One, I guess, final question around, do you see some more initiatives by General Motors to localize supply? If you can't, I don't know if you can't answer that.
Yeah.
Is it here? Is it Mexico? Is it de-risking a little bit in China? You know,
it is de-risking.
Is there opportunities?
Yeah.
What I'm looking for, you know, for our local supply base.
I think if you know your business, Mexico's full, right? I mean, they're busing people 2 hours to come to work in certain areas.
It is busy.
I mean, they're busy, they're full, right? Are we de-risking? Yes. Geopolitical things are certainly out there, right? Elections coming, chaos is here, right? But I'll share with you that I struggle with the play because it doesn't matter if you're tier 1 and you bring it here. What about the tier 3 that sends you the part? They're going to bring you to your kneecaps faster, right? So I'll tell you this. Do what's best for the business, get the cost right, and I don't think it matters where it goes. We would ideally want it here with the right cost, right? The right cost is not at certain parameters that some of our suppliers are coming at us with. And the reason is, full transparency, they inflate, suppliers inflate things because they don't trust. I get it. They don't trust EV volume. They don't trust this. They don't trust that. I understand that. I absolutely understand that. But I'm going to tell you, we're in a full-size truck extension. So think about our full-size truck. I think we sell the most trucks. I don't know if we're the number one, you know, there's some debate there. But I think we sell the most full-size trucks. You believe that we just went through 5 months of talking with our supply base. Now, you guys got to think about this. We've overshot the value. We've overshot we are building more than we've ever built. So we're going to extend it for a period of time. How many suppliers came back and said, I'll give you $1 off? There you go. None. How fair is that to us? How fair is that? Yeah, you're going to be the first to knock on our door and say, oh my God, inflation just killed me. I got the material rate, right? And don't forget, I got analytics now for the last 6 years. I know exactly where I should be getting the capital back, the ED&D, the material, the labor. If you took out 3% year over year, like it's just that type of push and pull, I get it. And I think back when I was a young engineer sitting on top of a roof and doing silly things, we didn't have these tools. So I didn't expect that. But now that we have them, we should coincide and get together and really figure it out. The data's king.
It's a big deal. It is a big deal today.
Big deal.
And we use it for competitive analysis, and these companies that are, and our third parties, your clients should know that. That's how they should be benchmarked. They need to be benchmarked. It's what Charlie and the team has been working on with several clients is, why are we not competitive? Why, in many cases, they are.
Yep.
And they're just misquoting. So
And I will
we
share with you.
know American I know it. I see some amazing companies, tier 2 companies that you probably names you don't always hear about, but they're doing some amazing things, and they can be competitive. And I think they do miss it on cost sometimes. Yeah, that's right.
And the
So-
cost is king. And I will say that we have a lot of people, 300 and some people, right? We have 264 here. Our team will come out and help anybody you want. If you open the door, we'll be there. And the reason
awesome.
isn't because we want to uncover your things. It's, again, I go back to that model. I want to make the best model. I want to be fair. I'll tell you exactly how much SG&A and P I give you. How much? 14 and a half. I'm not going to lie to you. I'm fully transparent.
There's a data point for you.
There you go. And I tell every supplier, come on in. Absolutely. Because you know what that recipe is? Get ready, because now you're going to meet the labor I got too, and the material I got too, and the capital cost I got too.
Yeah,
That's the importance of the recipe.
yeah.
But I'm showing you that I've taken into account all your burden. I laugh, the plowing, the mowing, the toilet paper. I got it all there. We thought about it. Okay.
Got it all in there.
We got it all there. Now you want to feed your staff? That's on you. Take it out of your own profit, right? It's that detail that I think is where we must get to, and that's what this process is guiding us to. Again, Six Sigma.
Yep.
I will preach that, right? Edward Deming, right? If you don't know what you're doing, you don't know the process, right? I mean, that's clear. You better know what the hell you're doing, especially in today's market, especially when there's 50% capacity out there.
Yep. And it aligns exactly with our topic of fostering a culture of continuous This is where it's going. This is where we see, and we think suppliers need to. This isn't hunkering down from volume. It's about a hunkering down about getting smart and knowing your costs and getting more efficient and more productive, because there are opportunities.
Absolutely.
Absolutely. So, I don't. Are you able? You want to take a few questions from the audience?
Sure, I'll take any question.
You know?
Absolutely.
Do we
Again,
have- sorry.
don't ask me a question you can't accept the answer to. I
Do we
live
have
by that
any-
model.
I'll ask, do we have any questions in the audience? I didn't have any pre-scripted, but I just wanted to throw it out there for anything for Tony. Everyone's scared now. So,
Yeah.
go ahead.
3%? Year over year. Manufacturing. So our manufacturing plants, when I was supervisor and stuff like that, the IE team forces you to look for 3% year over year reduction. I will also know or share with you that if you deal with GM and purchasing, they use a term LTA, right? I wish we'd punt that thing out the parking lot in spot 86. It shouldn't be LTA. It should be continuous improvement. Everybody knows about continuous improvement. Now, should that be all my profit? Should that come off of mine? I don't know. But that's up to purchasing and you to sit down and talk about, right? That number is strictly from our internal metric of 3%. But what people didn't understand, which I brought to the table, was it's not 3% if inflation's 7%. Right? Now you got to find 10%. And what is that? When I was working here, I would drive up in the morning, and there'd be 96 semis sitting out here to unload. I'm joking about 96, but there was 15. We got 15 docks, they're full, you got 15 semis. Do you think that's how the manufacturing plants operate today? Not a chance in hell. That truck's got to be there between 8:18 and 8:24.
Yep.
That truck's got to be there between 8:27 and 8:36. And if he ain't coming, he calls and gets the hell out of the queue, and he's got to peel himself back in, and a lot of bad things start to happen. I get it. Okay? The reason why I bring it up is process. So I tell people, because I started in manufacturing. I wish everybody started in manufacturing. I do. Why? Because I get people that are they have such anxiety because their PowerPoint doesn't look right. I mean, you have no idea what anxiety is. We're literally running wheels down the damn plant floor to throw them on the truck. That's anxiety. Sweating, just profusely sweating. It's not about your PowerPoint. That's why I think people should understand what a true crisis is. And when I say that, I talk about that process. I talk about that 3% year over year. Get your teams, as Charlie spoke about, get your teams involved. Make them be a part of that. Make those ideas come forward. I had the chance to put in body shops, 2 turns in Arlington, Texas, our #1 most profitable plant. And I'll tell you, you don't go to Arlington, Texas unless you're one of the chosen. That doesn't mean I'm any good. It just means I was a mule and they rode me until my back broke. Okay? But what it taught me was what it takes to be successful. And when I talk about this, this is a good story but a sad story. I put in Arlington Body Shop to build Escalade, Tahoe, Yukon XO, all of our sport utility large vehicles. There were 400 people that were running that body shop. My last time I did it was 2004. We have models now that our body shops are going to have 15 people in them.
Jeez. Wow.
You do the math and call me back. How does that happen? Technology? Bin picking? I was the first one at General Motors that started robotic unload. That's probably what fostered me to get promoted. I saw a process and said, this is no good. 3%. I got to get 3% out. I looked at it and I'm like, why don't I go robotically unload hoods? Could you imagine this? Hoods. I didn't pick something small. I picked a hood. And I can remember my director, who's now retired, he said, you want to lose your job? No. I think this is what we should do. He said, if it fails, you're fired. Perfect. If it succeeds, what? Then you're promoted. Perfect. Let's go to work. I'm not going to tell you it was perfect, okay? I got promoted, but there was some scrapes, right? Literally levitated the hood inners. Literally racks of hoods and robots coming in with suction cups and cameras and everything else. The one thing I didn't understand, and shame on me, you know how bad those racks get beat up, getting shipped over the railroad tracks and everything else? I didn't think about that. I thought 4-inch, robot could find it with suction cups. 4 inches wasn't enough. Almost brought us to our kneecaps until I came up with another invention that said, holy shit, we're going to put a cone on every single bottom of the rack so I can control repeatability. It's the only thing that saved my ass. Otherwise, I'd be working with you, okay? But I'm here to tell you, General Motors took that invention, not me, others, took that invention, and we are robotically unloading a ton of stuff, just like our supply base. We know that. We know that you guys, we were just at a tier 1 big supplier, probably one of the biggest in this town. And I walked through and I'm like, holy shit. My model's got like 4 people doing this work. There's not even a person around here. Holy shit. What's going on here? All robotic.
Yeah.
All plastics. Just amazing.
That's what's going to
Great
happen.
technology.
Yeah.
Great vision. Great innovation. Awesome. They got 29% out of that, I promise you. But all we ask for is 3, year over year. And my staff is held to it, almost to a fault.
Yeah.
Yes.
One more.
Does your team specifically do anything with CCA?
Yep.
Are you more focused on just
Nope.
mass production?
Nope. We talk to CCA every day. And I'll share with you openly, because that's the kind of guy I am. Get ready, because packaging is going to get after it. We're going to get after packaging. So you bring up CCA, get ready. Packaging is kind of a hidden, it's behind this grass here, okay?
Coming after it.
Right? And it's obvious. But again, when we started this process, we have tiers, Six Sigma again. We're breaking it down. We're getting to that point. Guys, transparency is transparency. Relationships are trust.
I'm laughing because that's what Charlie goes after.
Yeah, it's like
Packaging.
it's
like the
almost
easiest
like my
one.
16-year-old son could
I don't
step
know why
up here
that's
and
the
say, Dad,
easiest one, but
Dad, it's right here.
yeah, it
Right?
seems to be the low-hanging fruit.
So if you want something to offer you 3%, go look there first.
yeah, We do.
Don't be so arrogant that, I can't give you $1 back.
So,
Please, please, let me help you.
well, we're right on time here. Tony, I can't thank you enough. I mean, just being open and honest and joining us today, and so important for our client base and our third parties to share with their clients. Really, again, excited to have you. But join us. We have our networking following here. We have open bar. We have looks like a really nice buffet out back. But most importantly, for those that did sign up, we're going to be hitting the track. I think we're going to be going out this door here for track experience rides. So please join us for those. I know last year was a big hit. And that's it. That's a wrap. Another
Thank you, everybody.
automotive outlook.
Thank you, Tom.
Thank you, man.
Thank you.